Live from the nation's capital this morning. Good morning, good morning. Alongside Tom Keene, I'm Jonathan Ferro. Together with Katie Lyons back in New York City. And Katie, in this market, we've got a lot to talk about.
We always have a lot to talk about these days, John, and yet even with all that we have been talking about, fear of recession really first and foremost, in addition to political turmoil, we're coming off of 3 days of gains on the S&P 500, and those gains are continuing in the future session this morning. We're up about 8 points on S&P futures, or about 0.2%, about the same for the NASDAQ 100 futures, and you're getting a little lift of the small caps as well. They're up about 0.3. But where a lot of the volatility has been concentrated is in the bond market. Of course, we got those Fed minutes yesterday at 2 p.m. Eastern time. You saw a massive move at the short end of the curve as the Fed talked about its focus on inflation. Seems to be teeing up a move of either 50 or 75 basis points this month, coming up in just about 3 weeks. And as a result, you have an even more deeply inverted yield curve. Right now, the 2-year Treasury yield, it's only up about a basis point or two, but it's still north of 3%, whereas the 10-year yield right now trading at 2.9538, your 30-year yield at 3.14 at the moment. So that yield curve reflecting the concern out there that the Fed is going to move aggressively. Short end goes up. That may cause an economic slowdown, a little bit of pressure at the longer end. Finally, when it comes to the political situation, our focus is, of course, in the UK with Boris Johnson, the Prime Minister, planning to resign at some point today. You initially saw a much stronger pound on the back. We've seen some fluctuation. Nonetheless, the pound is stronger by about 0.7% against the U.S. dollar. We are trading right at that 120 level. The question really surrounds the trajectory of fiscal policy and monetary policy as his resignation comes, as the UK is dealing with a serious cost of living crisis, Tom.
Katie Lyons, thank you very much. And TK, we're still waiting to hear from the Prime Minister, potentially in the next 30 minutes or so. There's been reports that midday local time we'll hear from Boris Johnson.
Midday in London, and of course here in the early morning in New York. And you really wonder what he'll say. I have memories of you covering this out of our London shop, of David Cameron coming out. A very changed David Cameron. How does Boris Johnson adapt and adjust to us? It's a huge mystery.
I think the fact you don't have to think that far back for this change of the baton from Prime Minister, from Conservative to Conservative, just goes to show you about the moment we're in, Tom, in British politics. Well, okay. We've done this many, many times in the last few years.
It's like the Wars of the Roses. I mean, that's what it amounts to.
Is that how you're going to characterize this situation?
I am, okay. And I'm going to speak to someone expert on the Lancasters and the Yorks, and also Game of Thrones, which is probably thrown in here as well. Adam Posen should always be with us in Washington. He's president of the Peterson Institute, former Bank of England Policy Committee member, and with the Peterson Institute has provided terrific economic leadership, and right now timely Brexit leadership as well. He had a root canal done at the Royal College of Surgeons recently with the Peterson Institute and gave an important speech. You spoke about what Prime Minister Johnson wants to do, which is make it a global Britain. How much damage has this Prime Minister caused in the effort of the United Kingdom to move forward?
Thanks for having me, Tom. And this this Prime Minister who thinks he's a president has caused untold damage. The Brexit situation by doing brinksmanship with the EU over Northern Ireland was huge. It undermines trust, it undermines certainty for investment. It shows how damaging Brexit is, that on the one hand, Northern Ireland's doing better than the rest of the UK because of the non-implementation. And even his crazy Brexit minister, Rees-Mogg, said, I can't fully implement Brexit because it'll just make inflation go higher.
Can the parliamentary system, the present structure, survive modern news flow, modern acuity, the speed of information today? It seems, I make a joke about the Wars of the Roses. This is not funny. Lancasters and York's had time to breathe.
Yeah, this glorious summer of the son of York is already coming to an end. And as Jonathan was just saying, you've got turnover in prime ministers so repeatedly fast. But it's not just there, right? I mean, we have politicians disliked on both parties in the U.S. We have in France, Macron go from a win to a few weeks later, a complete setback in Parliament. We have a genuine, like the 70s, crisis of democracy. There was a famous report, Tom, you're too young, but Sam Huntington and others wrote for the Trilateral Commission back in '73 about the crisis of democracy.
There's a first for everything. You're too
young. You're just killing me, Adam.
You're raising a really important
He's clashing with me.
I'm going to save you both. I'm going to save you both so you don't clash anymore. On the policy front, on fiscal policy, there's a mechanism to deal with this.
Yeah.
You understand the perspective here. There will be a new leader of the party. Right. There will be a new prime minister. There will be immense pressure to call for an election. Right. I have no idea if that's going to happen. What we need to work out from the fiscal side is what is the optimal fiscal policy right now to address the problems we have in this economy. Problems that are not just unique to the UK, they're similar to Europe and here in the United States as well. I can't work out what that policy setting should actually look like, what we should be asking from the next government.
It's a tough situation, Jonathan. You're absolutely right. In the UK, because it shrunk itself through Brexit, it's more vulnerable to being an echo chamber for shocks. So as I argued last month, when the inflation hits the same as everybody else gets the inflation, it resonates more and amplifies more in rattling around in the UK because you got a more limited labor market because they've shut out the EU workers. You've got less inputs and more expense to get inputs because of the Brexit red tape as well as the pricing. So what you need is a fiscal policy that simply has to accept that that's the reality. And the biggest thing that they can do is keep the fiscal balance on the right track because they are small now, and you can see the pressure on the pound. It may have popped up a little with the prospect of Boris Johnson's departure, but in the end, they have to avoid overheating more than anybody else of this size.
Governor Carney, I remember bringing up a few years ago, he said the speed limit of the UK, the British economy, has changed.
Yeah.
That once you become supply constrained, and perhaps permanently so, that you start to bump against this inflation problem perhaps more often than not. And I wonder whether we've broken into perhaps a new regime that is going to stick around. Adam, I'm just wondering how you're thinking about that dynamic and whether that's unique to the UK or is that a problem we all share?
No, I think it's more unique to the UK. More unique isn't a real word, but anyway, I think it's primarily UK and not US or Europe. I think people are making a mistake if they think we're in a new inflation regime in general. I think we're going to fall back. But in the UK, you've fallen back towards the 70s, so it is a new regime, and they have to worry more. I've been saying this since Brexit. The Bank of England, and we're seeing it now, has to keep one eye on the pound, one eye on inflation expectations in a way that they didn't before.
Adam, let's catch up here on the real Adam Posen theme of the last couple of years, and no one has captured this more than you. Olivier Blanchard had the courage at the IMF with Stiglitz to begin to consider 4% inflation as a goose out of the great financial crisis. You've carried that forward to say the new 2% is 3%, and I see an entire world, an entire zeitgeist catching up with Adam Posen. Refresh that right now. Does Jerome Powell have to go to 3%, or institutionally does he have to stick with 2%?
In name, he's going to have to stick with 2%, Tom. What I had been hoping was we would have a little bit of inflation, and that would allow them to opportunistically say, okay, we're above 3, we're not going to go all the way down to 2. Given the credibility concerns, which I think are overdone, but for the moment are real, they're not going to be able to say that. They probably can't say that until the next strategic review, which is what, 2024, 2025. What they can do, however, is what's likely to happen, which is they're going to bring inflation down. It may be second quarter of 23, it may be third quarter of 23. They'll get it down so it's starting with a 3 handle. And there may be a recession that goes with it. And at that point, they're not going to ease up before then, but they'll ease up then. It'll be de facto looking like 3.
For global Wall Street, and I've got to be very careful here, folks, we have a cardinal surveillance rule. We do not do differential equations with the White House in the background, ever, ever. But the math here is really important. We're at, say, 9% inflation. It's highly nonlinear, highly non-smooth to bring it down. Which inflation point matters to you right now? Is it getting to 5%? Is it making that first tick down? Or do we have to wait to get down to 3% to get any sense of market calm?
No, I think once you're on 5 and it's clearly below 5 and it's clearly trending down, you should have the market calm. You're already seeing the calm, frankly, in the long bond. Not calm about the recession, but calm about inflation. In all the forwards, that's what you're seeing. And so I think they just have to, the big issue, which goes to my colleague Blanchard and Summers, is how much wage inflation is there going to be? The big difference right now is not that we all got that right in Peterson, that the inflation was going to be much higher, and Larry and Olivier did their job great and did that. But the issue is how costly it is to bring it down, how high the terminal rate has to be. And I still take the under versus Larry and Olivier because I think the wage inflation is going to tail off. Now, if it turns out unit labor costs are still going up, in a few months, rather than starting to trend down, then Olivier and Larry are probably right, in which case we're going to see you're going to have positive real rates. there's still hope we don't have to go all the way there.
The payrolls tomorrow. Let's talk about the incoming data over the last several months. What we have seen is decent gains on the payrolls front. Unemployment has actually stopped coming down, even as we've achieved that, and wages haven't accelerated. Now, some people sitting here might say, maybe this labour market is not as tight as we perhaps thought it was. What would your take be from just looking at the data over the last couple of months?
Well, to be honest, just looking at the data, Jonathan, it's screwy data. I mean, what we've got is the labor market numbers, which generally have been the most reliable data for the U.S. or any major economy. You rely on your labor market numbers to tell you what's going on. And they've been really completely out of whack because, remember, we had, at least on paper, a contraction in the first quarter, and yet we see these incredible labor market numbers. We see vacancy ratios to, meaning number of jobs available to job seekers, at levels we've never seen before. We have a new paper, as it happens, coming out from Peterson, from Blanchard and Summers, looking at this. It'll be out probably next week. And they basically say, you got to take this seriously. The labor market is genuinely very tight. I'm more of the persuasion, you look at the numbers, if they don't make sense, there's something wrong with the numbers.
So if you're a policymaker again, how would you interpret the incoming information? What would you look at? We've heard from Chairman Powell, who's looked at things like consumer expectations on inflation in UMich. That's new to all of us. That's a little thing in a data point that we kind of used to pay attention to, and now it's the difference between 50 basis points and 75.
Yeah, I think that focusing on that one data point and using that to explain the 75 versus 50, I think was a mistake in communication, frankly. I think what they've got to be focused on are two things. They've got to be focused on trends in unit labor costs, meaning productivity, wages net of productivity. And the second thing they've got to be looking at is the longer-term expectations in the bond market. Both of those are looking flattish to down.
Right. Very quickly here, we have an experiment underway behind us. A central banker, a Secretary of Treasury. How's the Yellen experiment going?
I think her signature issue, which is the international corporate tax deal, was the right priority for her and for this country. I think she did a good job of getting as far as it has gone, but now somehow you have to get the Senate to buy it. I think the American Rescue Package was too big in too short a time, but that was foreordained.
Should she step aside? She served her public duty.
I don't talk about individuals. I don't. Even individuals I respect greatly, or because individuals I respect greatly.
John asks me every day, should I step aside?
I do not ask you that. Someone's going to take that seriously.
It's like Trump. They're going to have to drag him out kicking and screaming.
Tom's like Trump. Can we clip that and just play that out through the rest of this day? I just wonder, Adam, and just briefly, would you even call the American Rescue Plan the Yellen experiment?
No, that was exactly my point. I'm sorry I didn't get it out properly. It was Pelosi and Schumer with Biden's acceptance that was the plan. Whether or not, I have no idea what went on in the White House and Treasury in the decision. But the biggest issue was, once that plan was clear, it falls on the Fed. The Fed should have been tightening and worrying more and forecasting more inflation once that plan hit.
This has been wonderful.
Adam Posen of the Peterson Institute. Adam, thank you.
Thank you.
And TK, we're still dealing with the consequences right here, right now, today.
We are. I mean, there's no question about it. And again, the mystery to me is what the labor market can do, as Dr. Posen said, and that's Jobs Day.
Live from the nation's capital this morning. Good morning. Payrolls Friday coming up tomorrow morning.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
He's not only lost all of his popularity in the country, he's lost most of his popularity in his own party. A majority of conservative voters now want Boris Johnson to resign. It's surely at this point his tenure is written in days, not even weeks.
Or maybe minutes, or perhaps hours. That was Ian Bremmer of Eurasia Group, the president, weighing in on the situation of the Prime Minister in number 10 Downing Street. From Washington, D.C. this morning, good morning to you. With Tom Keane, I'm Jonathan Ferro. Here's the price action for you, shaping up as follows on the S&P 500. Coming into today, 3 days of gains on the S&P futures. Just a little bit firmer, higher by 1/3 of 1%. Yields continue to grind higher on a 10-year by 2 basis points to 295. And that curve inversion, Tom, is very, very much an issue right now for a lot of people. It's a feature of this market.
The feature of this market is a curve inversion where every basis point counts. A basis point is 0.01 percentage points.
Thank you very much for that. Thank you.
So to go from 5 basis points to 0 is 0.05, and we've come down much further than that to a negative 0.07. I'm also watching weaker yen. And John, we've got to remember, as you said, very quietly, 3 or 4 days in a row, we've seen equities lift, and suddenly a VIX under 27 is not a small matter.
Are we doing bond market 101 through the rest of this morning?
We are.
Are we doing that with the White House a little bit later?
Where they need bond market 101 at all times.
You said that, not me. You said that, not me.
Let us continue here, and we continue, of course, on what's going on in the United Kingdom. Tina Fordham is truly expert at this, founder and geopolitical strategist for Fordham Global Foresight, and we're thrilled that she could brief us this morning on what she observes from London. Tina, thank you so much for joining us. The distinction of the moment is perhaps we see Prime Minister Johnson walk out of 10 Downing Street and speak to the nation or his party or to the world. Who will he speak to?
Johnson is obsessed with the idea that he has a kind of a U.S. presidential style mandate, right? He keeps talking about how many millions of voters voted for him, but that's not the system that we have here in the UK. It's parliamentary democracy, and you've got a lot of pushback, including from within his own party, about how he sees his mandate. However, his time is up. He's resigned as the leader of the party. He still believes, I think, that possession is 9/10 of the law, and seems determined to stay in number 10 until an October leadership contest. But this isn't U.S.-style politics, and I think it's important for your viewers to understand it's a different system.
Ben Wallace, the defense minister, was scathing about the idea of staying in office through October. How can he have power as a lame duck prime minister, and particularly given a war in Ukraine?
And it's an important question, right? So the difference, again, compared to the U.S. situation, lots of people comparing what's happening here in the U.K. to Trump. Well, there are a lot of differences. One is that the Houses of Parliament isn't on fire, and people aren't kind of breaking into it. Ben Wallace is in good company amongst conservative MPs and cabinet members, talking about how the prime minister should not stay in office that long. And so it may yet be the case that the leadership contest is moved forward. I think there's an element of vanity at play, because if Johnson leaves now, he ends up with the rather dubious distinction of having served a shorter term as prime minister than either his predecessor, Theresa May, or Gordon Brown, the former Labour prime minister. So I think there's a bit of that at work.
Tina, if I'm in the market this morning, I'll find this either depressing and or entertaining. But ultimately, I'll be trying to work out whether a fiscal shift is in store from the next government in the UK. Do you think there is a fiscal shift brewing here in the United Kingdom, a change from Chancellor Sunak to something else?
Well, and that's where there are limits to the comedy aspect. I mean, the Economist front cover says clown fall, lots of jokes going on. And this is a prime minister who, of course, has kind of styled himself as being, kind of liking his banter and that sort of thing. The city hasn't taken this too hard yet. We see a little movement in sterling, but as you point out, Jonathan, what investors, UK investors, have been hoping for is that a successor to Johnson, or indeed his new chancellor, might actually not make good on promises to raise taxes. This is also in turn raising concerns about the state of UK public finances, where the market has been expecting a 50 basis point cut, hike in August from the Bank of England. So how does this affect all of these things? That's where the uncertainty of postponing the leadership contest until October is very problematic. I think you will see an inclination from the Conservative Party to want to avoid triggering a new election by trying to still give out more goodies at a time when the country can't really afford it.
What are the goodies that you think they can actually deliver, Tina? You said at the end there they can't afford it. What can they do? Because as you've pointed out, for many people in the UK right now, they've got bills to pay at the end of the month. Energy prices are going up. They could be going up again before the end of the year in a material way. What can they actually do to support the British economy? What can they afford to do?
All they can do is try to buy time. And this is what we see this prime minister trying to do. Inflation and strikes go hand in hand. So we've got the summer of discontent. The airline chaos this summer is going to upset a lot of people. And then it's not just the kind of irritation factor, it's putting real pressures on households. So resetting the income tax thresholds will be something that they'll be inclined to do, to not raise taxes. I think no one's talking about this yet, but whenever I start to see this kind of, dislocation, I start to wonder which industry might be on the sharp end of a sort of a windfall tax. That tends to be low-hanging fruit. But the summer of discontent with strikes is going to be followed by a pretty tough winter. The UK isn't as exposed to other European countries to Russian gas supplies. But the UK is already talking about rationing and possibly not meeting its obligations with other countries. Taking over the leadership of the UK is going to be a bit of a poisoned chalice. But politicians, get into power first and then work out what they're going to do, and that frustrates the city.
Well,
Tina, that's not going to change. Tina Fordham there.
Wonderful
Fordham
brief.
Global Foresight. This is a headline just crosses the Bloomberg, Tom, according to one official. The Prime Minister considering whether he can stay on as a caretaker prime minister at the same time as Keir Starmer, the leader of the opposition party, the Labour Party,
I'm just
on the
baffled.
BBC. I know you are, saying the prime minister should leave right now.
On a July morning in Washington, this is original politics, and I would say for our American audience, it does redound back to America, in that these are things that are unimaginable within our process, and I can't believe I'm saying that with what we've gone through with President Biden, with President Trump, and frankly, moments before that.
I keep stressing there is a mechanism to deal with all of this.
What
we
is
don't
it?
understand,
Please, help
what we
me.
don't understand is the sequence of events from here, Tom, and a timeline for that sequence of events. And to Tina's point, there are things that need to be dealt with right now. And if you don't have a government in place to deal with them, Tom, we've got an even bigger
What is a
problem.
caretaker government? Do they have
can they
double-digit inflation?
They may have double-digit inflation to deal with through the
Caretaker.
rest of this summer, Tom. And that's the problem. And there are many. Let's be clear about that. Futures up 0.2% from DC this morning. Good morning. With Tom Keane, I'm Jonathan Ferro. This is Bloomberg Surveillance.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The market is really pushing the Fed right now and saying, how much longer is this rate hiking cycle going to last?
Anything that's sensitive to the economy is just being taken out of the woodshed and destroyed right now.
Take a deep breath and not be so negative on equities. We've priced in a lot of risks so far this year.
We do think that the economy will be able to withstand higher overall interest rates.
Right now, I think we can confidently say we're not currently in a recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from the nation's capital for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene. I'm Jonathan Ferro. And TK, where do you want to begin? With the building behind us, or do we look across the Atlantic to the United Kingdom and a very lonely number 10 Downing Street for this Prime Minister?
Weeks of planning for our joy here in July in Washington out the window, and we're waiting for the Prime Minister. Maybe we're going to see him in 30 minutes, but we don't know the theme. We don't know what he's going to say, the set of uncertainties for the United Kingdom. And I might point out, just as an aside, for Mr. Zelensky in Ukraine is substantial.
He has been a solid partner to the Ukrainians. Mr. Zelensky would confirm that, Tom. On the Prime Minister's exit, we know he's going to walk down that road. What we don't know is how long that road actually is, because there have been reports already in the last 30 minutes that perhaps he might try to stay on as a caretaker PM. And don't you dare ask me to define what on earth that means for this country in the UK.
The original process here redounds back to the opposing party, but it's different than America. How does Labour, how does Mr. Starmer react at this moment?
Clearly, the sequence of events will be as follows, Tom. The Prime Minister engineers an exit. I say engineers, it's been out of his hands. Then there'll be a leadership contest for the Conservative Party. Then there will be immense pressure from the opposition and the rest of Parliament to push for an election in the UK.
Can I be as dramatic like season 7 of The Crown to say the Queen steps in here?
How
or
can
the
I
Prince
take
of Wales?
you seriously when you say things like that?
But come on, I mean, this is a crisis moment. We have a Queen who is fragile. Does the Prince of Wales step in and say, make that election now?
When you're in a crisis, Tom,
I'm just trying to get you in trouble here. Keep it
I
going.
understand, and I'm certainly not going to do that this morning. I'm going to stress two things. One, there is a mechanism to deal with this in the UK. It's not an original moment. We've seen it quite a few times.
Okay.
Two, I don't think the rest of the country right now bats an eyelid at what is happening in the UK. And by the rest of the country, I mean the country we're in. I mean the rest of the world. For the rest of the world, Tom, looking into the United Kingdom, on the hierarchy of problems right now that the rest of the world has, Tom, where does this feature? Where does this feature?
It's entertainment
Political
for a lot of other people.
Entertainment.
It is.
Now, you tell me, for the British public right now, is it entertaining? Perhaps so, a little bit of palace intrigue, but ultimately, there are bills to pay at the end of the month, Tom. Energy prices are going up. And if I'm in the UK right now, looking at what's happening at number 10 Downing Street and across Parliament, I just need someone to deal with some of this. Some of the criticism that has been levelled at this government, and you can see it in the research notes on foreign exchange, is the lack of fiscal support in the country for the pain that some people are going through with energy prices at the moment. And what I'm trying to understand, in a very calm manner, Tom, is trying to understand whether we do get that fiscal shift from the next government, and whether they have the capacity to engineer that.
But then what we have here with our global Wall Street audience is the litmus paper of the foreign exchange system. We see a little bit of a sterling rally today, but I still see great uncertainty out there in the data.
We're down at 120. Nomura, Jordan Rochester, you see that new target? 115, perhaps down to 110. You could see a whole lot more sterling weakness. Precisely. So what are we doing? We're importing inflation. We're facing the prospect of an even weaker currency, and no one can tell me with any conviction as to whether central bank rate hikes will actually mean a stronger euro or a stronger pound.
And we got to do this quickly. It's so important. The blur of headlines that we've seen in the last 20 minutes, ECB looking out to their next meeting and seeing that they have a fragmented theory about a fragmented policy.
I mean, you're going to wind me up. You're pushing my buttons. Apparently,
I'm trying.
Apparently, they have a name for the anti-fragmentation tool. They have a name for it, but I'm not sure they have any idea
Somebody
when that's
emailed
going to
in,
get
they said,
rolled
are
out.
you guys on speaking terms when you're sitting that close together in Washington?
We
I
are
said,
just
We're
about.
doing lunch here at the Hay Adams after the show.
I can tell you it took a few drinks last night to get us this close.
We did.
And a cigar for this one as well.
Are we briefing? Are we
The voice is
dating
a
right
bit
now?
huskier.
Should
Are you and I dating?
Should we data or brief?
Oh, data.
Data, not dating.
I thought you were asking if we're dating.
No.
Step at a time, TK.
Okay.
Step at a time.
It's like Love Island.
Equity futures. You've been watching that. Look like this on the S&P 500. New season, Tom. I haven't been watching it. Apparently, it's available on Hulu.
It is, yes.
Another good. Streaming devices, maybe. Futures up a quarter of 1% on the S&P 500. Yields just a little bit higher at a 99 handle on WTI that has moved how quickly, Tom?
Well, it's moving a lot, but this is what we're going to hear from our two guests from the White House today. first thing out of their mouth is Joe Biden dropped the price of oil.
Brian Deese, the National Economic Council Director, is going to join us in the 9 o'clock hour. Do you really think they're going to celebrate this move we've seen in gas prices? Do you really think they're going to do that? But just before the president goes to the Middle East and potentially asks the Saudis to boost more oil, they're going to say, we're happy with the trajectory of things?
No, they're not going to say the trajectory, but these are little nuances along the way for a beleaguered White House. Look at their ratings. They're beleaguered.
Do you know how many messages I'm getting about us potentially dating? Anyway, should we get your morning brief? We can do that with Kaylee
Save
Lyons.
us, Kaylee.
Hello, Kaylee.
Please.
All right, yeah, it's time to get the briefing now. Now, of course, we thought one thing was happening at 7:30. Now there's two big events happening at 7:30 Eastern Time. One being apparently that resignation statement from Boris Johnson. The other being the ECB minutes or account from the June policy meeting. Apparently, according to Bloomberg's reporting, they don't actually have any clarity around that anti-fragmentation tool, even if they have a name for it. So maybe we're not going to get that, but we could get some insight into how they're thinking about a potential 50 basis point move come September, especially considering the euro is around its weakest level since 2002, trading at a 101 handle. Will the ECB hiking rates actually help that story at all? Then at 8:30 a.m. Eastern Time, initial jobless claims data here in the U.S. 230,000 is the print expected. But remember, we have been seeing a tick up in recent weeks. So how does that set the stage for the non-farm payrolls report coming up tomorrow, considering this Federal Reserve is so focused on inflation and seems to be okay with the labor market softening up a little bit? And speaking of the Federal Reserve, we will hear from two Fed speakers today, Christopher Waller and Jim Bullard, speaking at separate events, but both at 1 p.m. Eastern Time. This is an updated take potentially from the minutes we got yesterday, which of course are 3 weeks old. How has the thinking evolved as we get closer and closer to that July meeting, John?
Kaylee Lyons, thank you very much. We may hear from that Prime Minister as well, potentially in about 25 minutes' time, according to Sky News. 7:30 Eastern Time, Tom, perhaps 12:30 local, but at the end of the day, who knows?
Who knows? I don't think anybody knows.
If we're listening to reports right now, Tom, that perhaps he's considering staying on as a caretaker PM, then I'm not sure we know precisely.
I don't see the apparatus like in the United States where somebody messages it out in the first 20 minutes.
Usually they walk out the door and put the podium there, and then you can work it out from there. We need to talk about this market, and we can do that with Alifia Doriwala, the Managing Director of Rock Creek Group. Alifia, can we start here? The Everything Pain portfolio. I mean, is anything working this year in 2022?
I mean, you talked about uncertainty on the political front just as much in the markets, right? I mean, there's three themes that everyone's talking about, and it used to be short-term themes. Now it's going to affect the portfolio for the next 2, 3, 4 years, right? Slowing global economy, monetary tightening and inflation, and the impact from the Ukraine-Russia war. Nothing's been resolved there. We're still in the same. Oil, $100, $105, $95, doesn't matter.
You and Ashani are too young to remember 78, 79 and the glory of the bond bear market then. You people advise on quiet money. You have never seen bond losses like this. How does quiet money recover in bonds, price up, yield down? What is the actual mechanism to do that?
Well, you know, it's very interesting, and so thank you for calling me so young, first of all. I appreciate that. I don't know if some of my colleagues will be as flattered. I think a lot of us can remember some of the pain points in the markets, though. And I think one of the interesting things about the fixed income markets today is we're looking very, very closely at where is the 10-year yield going to go, what timeline do we have, and how do we start to manage our fixed income exposure.
So you're gauging your bond recovery institutionally off full faith and credit?
Yes, for now. We haven't started to see a ton of signs of distress, but there are a lot of indices that we're looking at, a lot of metrics we're looking at to see if the corporate bond market is starting to crack.
How would you describe it? We've taken out the wides of late 2018, about 550 through those levels. That was enough for this Federal Reserve back then to pivot. Clearly different world, different inflation level. How do you judge what is stressful this time compared to what was stressful then?
Yeah, well, you know, we have the benefit of investing in a lot of debt financing types of strategies, right? So we're looking to see what is the underwriting, has it loosened? We're looking to see where will the cracks be? We're looking at the high yield market. I mean, spreads have widened over 500 basis points, right, in the last few months. We're looking to see where are the relative opportunities and are you getting paid for that risk? There's going to be risk in the market, right? But defaults would have to double if we wanted to see a huge loss in our high yield portfolio. So is it the right time to start stepping in? I'm not saying we're doing anything right now. I think it's a wait and see moment. And I think we're going to have to wait and see where things, you know, shake out. But there are pockets of opportunity that we are starting to see, and I don't think we have to worry as much about credit risk in our fixed income portfolio as we do about duration management.
What are you waiting for? Talk to me about what you're waiting for. You stress we're not doing anything right now. Why not?
Inflation. I think it's been clear by the Fed that that is their target. They're looking at inflation, and everything's hinging around inflation, and consumer demand is going to hinge around inflation. We have a huge earnings season coming up, right? I mean, July is going to be a bellwether of inflation expectations, what are companies seeing, what are corporates pricing in. Q1 was pretty good. Everyone can admit to that. Q2, probably not as good. Q3 expectations are going to be worse. If consumer demand starts to fall, then I think that we will continue to see pain in the market, and we want to see the market shake out a little more in pain before we start making real investment opportunities.
The heritage of Rock Creek, when we meet with Afsani in Davos, is natural gas. She owns the high ground on the dynamics of gas and hydrocarbons as well. What is your response to the surge that they're living in continental Europe about natural gas? I mean, it's standard deviations out, isn't it?
The entire energy complex, we're in a different world, right? And there are a ton of investment opportunities, as you've heard from us before, in terms of the energy complex, in terms of natural gas, in terms of the tailwinds for renewable energy, wind, solar. There is so much that we can look at in terms of the next 5-10 years, and we're positioning our portfolios to take advantage of all of that. And unfortunately, Europe is going to take the pain in the interim.
You're advising. Rock Creek wanders into the White House today to meet with Amos and President Biden here on LNG. Can you be optimistic that LNG can rescue Europe by December?
Not by December. I think that's a heavy task. I think that everything that is going on within Russia and Europe is going to dictate whether Europe comes out ahead at the end of the year. But I'll tell you, we're not, bullish on Europe despite valuations, and it's because of the geopolitical tensions and the energy complex. How can you really be overweight Europe today?
That's the difficult question that a lot of people have. And Tom, for that matter, the rate differentials even matter to the euro when you can't tell me where the price of gas is year end.
No. You know where I feel on this.
I know exactly how you feel
on rate
about it.
differentials and spreads.
Alicia, thank you. What a great morning. I'm sorry you had to wake up so early as well.
Thank you very much.
They will question as to whether they agree to a 7 a.m. slot with us again.
Well, we need to explain this to our global audience that John and I in New York are rocking it at 5 a.m. industry-wide.
What time are you up this morning?
No, I mean just in terms of getting the city started.
Sure.
Washington, 8:30 is early.
Yeah.
8:30 is rude.
Try 9 o'clock.
Yeah, I was going to say 8:30 is rude.
Alethea Dorowala of Rock Creek Group. Alethea, thank you
so much.
Thank you.
We understand in about 17 or 18 minutes' time, according to a British official, the Prime Minister will be walking potentially out of number 10 Downing Street to deliver some kind of statement. We're going to hear from him potentially, Tom, at 12:30
He's
local
in briefings
time.
with Lawrence the Cat.
So that's in about 17 minutes. I'm pleased you're taking this so seriously.
No, well, it is a serious moment, but okay, how does this play in the Midlands? This is a serious moment. Do you sense that the nation's riveted to this? Or is it comedy?
How does it play in that so-called wall of seats that they won in the last election at the back end of 2019? A lot of people who hadn't put faith in the Conservative Party for decades and decades and decades did so. Have they been rewarded? Many people would suggest, Tom.
Well, we saw that in the recent few elections that there were, and maybe the Queen will call for a general election.
You're trying to cause trouble. That's what you're trying to do. In the next hour, Patrick Armstrong of Plurimi, and later we will hear from Brian Deese of the National Economic Council. This is Bloomberg.
courts has stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This week, June jobs are in focus.
I think we're all very curious how June jobs came in.
The labor market is tremendously strong.
We have never been in a recession with declining unemployment.
This Friday, the surveillance team will bring you crucial data and expert analysis at terminal speed.
There's so much uncertainty. We're going to have to monitor the data closely.
Everyone needs to recalibrate at 8:31 a.m. this Friday.
The June Jobs Report, Friday on Bloomberg Television and Radio.
Boris is a great personality. That's what actually appealed to a large section of the electorate. That's his strength, but it's also his weakness. And what has gone wrong is his inability to understand how very large sectors of the electorate feel about indiscretions.
The reaction to the Prime Minister's current dilemma in the United Kingdom. That was Lord Robert Hayward, the Tory peer and polling analyst. From Washington, D.C. this morning, good morning with Tom Keene. I'm Jonathan Ferro. Here's your price action this Thursday morning. Going into some economic data a little bit later, 8:30 Eastern, we get jobless claims. On to tomorrow, it's payrolls Friday. Equity futures elevated by 0.25%. We've had 3 days of gains into Thursday. It may well become 4. Yield just a little bit higher on a 10-year buy. Let's call it a basis point, Tom, at 293.72. And I don't think we can get away from this. Never mind euro dollar at 101. Crude at 99?
Yeah, I do think
big change. That's a big change.
I'd lump in there as well. We don't often do it, but copper, whether you look at Chicago Copper or London Metals Exchange Copper, it's all the same. Breaking down, no, plunging.
You've said it a few times.
Plunging.
These things are happening in commodity markets with China where? Open, shut, lockdown,
well,
reopening.
The bond thing that we reported today, I don't have the data in front of me, 200 gajillion on bonds in China to liquefy the economy. That seems to be the strategy.
Are we going to see more of that? And with that in mind, what's the downside on commodities if that's what's going to develop in the world's second largest economy?
We will see it because of the politics of China, which is there are very important meetings coming up rapidly.
With regards to the politics on China, we need to talk about the politics of this administration on China and whether we do actually see a removal of tariffs. Start of the week, that was the story. I haven't heard anything in the last 24 hours.
Why don't you bring in our next guest and we'll start with China. And
our good friend, isn't this nice that she's close to us in person?
People said we could get, we could meet
This is
her.
a beautiful thing. Anne-Marie, here in D.C., alongside us. AMH, good to see you. We've heard nothing in the last 24 hours on this. At least I haven't. Perhaps you have. Where are we?
Still TBD. I mean, the president has been given a number of options whether or not to keep those tariffs on. Obviously, there's just massive divisions in the administration. You have those that are China hawks, especially. Then you have Ambassador Tai saying, I will lose all my leverage if you do this. Then you have others like Secretary Yellen have said they want to reconfigure the Trump-era tariffs. The issue is the tariffs they would be lifting would be things like bicycles, basic consumer goods, sweaters. This is not going to impact his biggest problem, which is higher food costs and gasoline.
The news flow moves. Anne-Marie, no one in American media has a better understanding of London, Washington than you do with your time there. I'm serious. In this historic moment, there is a special relationship. How do we support a fractured prime minister? How do we support the parliamentary process of the mother country?
I don't see anyone in that White House coming out and saying anything bad about Boris Johnson today. What they're going to do is say, we maintain the special relationship between Washington and London, and we are here to support the British people. We always will be. Now, remember, when Joe Biden was campaigning, he said Boris Johnson was an emotional, physical clone of Donald Trump. They had a lot of hurdles to get through, but at the end of the day, they have supported each other. I would say two of the biggest things was the AUKUS deal, the nuclear submarine defense pact, and also stepping up sanctions against Putin. President Zelensky is in love with Boris Johnson, what he's done. But there has also been moments where they've, had some digs at each other. I would really recall the withdrawal of Afghanistan. Boris Johnson said that could have been done better. But at the end of the day, the relationship is what is important, not necessarily the individuals.
Somewhat of a schedule of 9 minutes until possibly we hear from the Prime Minister. Anne-Marie Horton, stay with us. And in London is Lizzie Burden this morning. Lizzie, paint the scene here before this historic moment for the United Kingdom.
The podium has just been set up in front of number 10 Downing Street. The officials are lining up. I had my finger on my ear because you can hear the protesters with their speakers. Here we go, it's beginning. Or maybe it's not. Let me tell you that there are reports that there are worries that Boris Johnson might not stick to the script. That we're expecting him to resign. The question is whether he's going to stay on as a caretaker Prime Minister. Lots of MPs saying that they wouldn't be happy with that. He's the personal reason why they're resigning, but yet he's starting to make interim appointments, so there may yet be another surprise with this speech. Tom, I know you like a tidbit. If Boris Johnson goes immediately today, his tenure would have been shorter than his predecessor Theresa May's, but if he carries on as a caretaker Prime Minister until October, let's say, then he would beat her. But in any case, it's a really humiliating end for a Prime Minister who started with that landslide election victory, the biggest since Margaret Thatcher.
Lizzie Burden of Bloomberg outside number 10 Downing Street. A bit of a technical problem there, Tom, but as you can imagine, a lot of people competing for signal at the same time outside number 10 Downing Street. There's bound to be technical problems. We're about 6 minutes away. The podium's out. They'll do a sound check, Tom. Then we'll hear from the Prime Minister. To Lizzie's point, we know where this is heading. What we don't know is the timeline to get there, and that's what we've got to figure out in the next 10, 20 minutes or so.
Let's paint for our American audience particularly, John, you mentioned it earlier, the territory between the Tories and the rich South and Labour maybe as a stereotype up in the North. It was shocking how well Boris Johnson, with his leadership, it was shocking how well the Conservatives did, defeating Corbyn in Labour. Those districts now, are they gone from the Conservative Party? Is that a safe statement?
They are going. I wouldn't say they're gone, but they are going. That will be chipped away at. You heard from a Tory peer about 15, 20 minutes ago, and what he said about the Prime Minister's personality, he called it a double-edged sword. The reasons that this Prime Minister has got in trouble are the reasons that some people found him appealing. It was off the cuff, it was loose, it was fluid. People like that kind of thing, but ultimately, can you run a government that way? And clearly, you can't run a government in a haphazard way. The other issue I'd have as well, Tom, sitting here, and I think you have the same problem, trying to understand the ideology of this Prime Minister and the kind of policies that he would like to engineer. It's a tremendously difficult thing to do.
Twice this morning, folks, in our coverage with experts, including Tina Fordham, you and I have heard this is a guy who wanted to be presidential. Explain how odd his presidential is from the prime ministerial from Tony Blair on.
If I back that up, I would be offering my opinion and endorsing that view. All I can say is that is a
We're
view.
among friends. Anne-Marie's here, Lizzie's at 10 Downing.
Let's be clear about this.
Give us your view.
In late 2019, the Prime Minister went for an election and ended up with a much bigger majority than people anticipated. Now, is he being presidential? I'm not going to give you my opinion on that. I will say this. That was a Conservative Party with a big majority that wasn't just concentrated in the south of the country, they had the north of the country as well. And the Prime Minister believes that that was an opportunity for him to do something big. The problem that a lot of people have, Tom, is that opportunity hasn't been used.
We're going to have to see. Moments away. An extraordinary moment.
20 seconds away. We'll be going to a commercial break. And then 4 minutes after that, we might hear from the Prime Minister of the United Kingdom. Boris Johnson outside number 10 Downing Street, potentially on the other side of this short break. From Washington, D.C., this is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Live from the nation's capital, I'm Jonathan Ferro in Washington, D.C. this morning. Good morning. With Tom Keene, I'm Jonathan Ferro. Throughout this morning, we'll be catching up with officials from the White House, including Brian Deese of the National Economic Council. Due to catch up with him in the next couple of hours. The focus at the moment for us and for many others too, on this door right here, number 10 Downing Street in London, the United Kingdom. Any moment now, the Prime Minister, Boris Johnson, will walk out of that door, Tom, approach that podium, speak through that microphone, and offer what many people believe will be the road to his exit.
For those of you worldwide, it is truly an original crisis. They're always original, but this one is so different. Did you see this coming, John?
A lot of people did, Tom. A lot of people did. And we've seen this before. I want to keep stressing that we have seen this before, that the British people have a mechanism for dealing with this. If the Prime Minister exits, there will be a leadership contest. Once we've established who the leader of the party is, there will be a huge, huge push to work out if we get another election. Here is the Prime Minister, Boris Johnson.
Thank you. It is clearly now the will of the Parliamentary Conservative Party, that there should be a new leader of that party and therefore a new Prime Minister. And I've agreed with Sir Graham Brady, the chairman of our backbench MPs, that the process of choosing that new leader should begin now. And the timetable will be announced next week. And I've today appointed a cabinet to serve, as I will, until a new leader is in place. So I want to say to the millions of people who voted for us in 2019, many of them voting Conservative for the first time, thank you for that incredible mandate, the biggest Conservative majority since 1987, the biggest share of the vote since 1979. And the reason I have fought so hard in the last few days to continue to deliver that mandate in person was not just because I wanted to do so, but because I felt it was my job, my duty, my obligation to you to continue to do what we promised in 2019. And of course, I'm immensely proud of the achievements of this government, from getting Brexit done to settling our relations with the continent for over half a century, reclaiming the power for this country to make its own laws in Parliament, getting us all through the pandemic, delivering the fastest vaccine rollout in Europe, the fastest exit from lockdown, and in the last few months, leading the West in standing up to Putin's aggression in Ukraine. And let me say now to the people of Ukraine that I know that we in the UK will continue to back your fight for freedom for as long as it takes. And at the same time, in this country, we've been pushing forward a vast program of investment in infrastructure and skills and technology, the biggest in a century, because if I have one insight into human beings, it is that genius and talent and enthusiasm and imagination are evenly distributed throughout the population, but opportunity is not. And that's why we must keep leveling up, keep unleashing the potential of every part of the United Kingdom. And if we can do that in this country, we will be the most prosperous in Europe. And in the last few days, I've tried to persuade my colleagues that it would be eccentric to change governments when we're delivering so much, and when we have such a vast mandate, and when we're actually only a handful of points behind in the polls, even in mid-term after quite a few months of pretty relentless sledging, and when the economic scene is so difficult domestically and internationally. And I regret not to have been successful in those arguments, and of course it's painful not to be able to see through so many ideas and projects myself. But as we've seen at Westminster, the herd instinct is powerful. When the herd moves, it moves. And my friends, in politics, no one is remotely indispensable. And our brilliant and Darwinian system will produce another leader equally committed to taking this country forward through tough times, not just helping families to get through it, but changing and improving the way we do things, cutting burdens on businesses and families, and yes, cutting taxes, because that is the way to generate the growth and the income we need to pay for great public services. And to that new leader, I say, whoever he or she may be, I say I will give you as much support as I can. And to you, the British public, I know that there will be many people who are relieved, and perhaps quite a few who will also be disappointed. And I want you to know how sad I am to be giving up the best job in the world. But them's the breaks. I want to thank Carrie and our children, and all the members of my family who have had to put up with so much for so long. I want to support that you have given our police, our emergency services, and of course our fantastic NHS, who at critical moment helped to extend my own period in office, as well as our armed services and our agencies that are so admired around the world, and our indefatigable Conservative Party members and supporters, whose selfless campaigning makes our democracy possible. I want to thank the wonderful staff here at Chequers, here at Number 10, and of course at Chequers, and our fantastic prop force detectives, the one group, by the way, who never leak. Above all, I want to thank you, the British public, for the immense privilege that you have given me. And I want you to know that from now on until the new Prime Minister is in place, your interests will be served and the government of the country will be carried on. Being Prime Minister is an education in itself. I've travelled to every part of the United Kingdom, and in addition to the beauty of our natural world, I found so many people possessed of such boundless British originality and so willing to tackle old problems in new ways, that I know that even if things can sometimes seem dark now, our future together is golden. Thank you all very much. Thank you.
Nobody is indispensable, including this Prime Minister. Nobody is indispensable. The Prime Minister of the United Kingdom, Boris Johnson, resigning, Tom, telling us just moments ago that we'll have a timetable for this leadership handover potentially sometime next week.
I felt very foreign there, very much from a distance. I was shocked at the language that I heard yesterday in the House of Commons on sex and on some of these immediate themes. Was he let down by some of his government?
I think he let down himself, Tom. When we really think about things, the reason people resigned is because of a poor judgment of character. That is why so many people resigned. And if he was let down by someone else, ultimately, Tom, what he's being accused of is that he already knew what this individual was about. He already knew the allegations against that individual. He was aware of them. And for many people, that was the reason they resigned in the last 24 hours, Tom.
What does he do today? What does he do tomorrow in what I would suggest is an original caretaker prime minister role?
We've got to figure out what this leadership handover looks like. And at the moment, we don't know. He thanked many, many people, Tom, and he talked about his commitment to Ukraine and fighting against what he believes is Russian aggression in Ukraine and supporting the Ukrainians to fight against them. And perhaps that support will be needed for years, Tom, not just months. And I think it was important that the Prime Minister came out moments ago and suggested the British people as a country will be behind that effort beyond Prime Minister Boris Johnson as a Prime Minister.
Did he apologize?
I didn't hear an apology.
About the specifics that I was shocked by yesterday?
I heard many thanks. I did not hear an apology. What I did hear was I regret. I regret that XYZ has happened, but I didn't hear an apology. So we get some coverage for you. We can do that from Westminster. We can do that with Francine Lacqua in London. Francine, your reaction to what you've heard in the last 10 minutes?
Well, good morning to you both. I think this was a very strong speech. This was a prime minister that was focused. You're absolutely right. He talks about regret, but he does not apologize. What people really, and you can hear, the sense of the atmosphere, it's tense, it's palpable at Westminster, and actually it was scenes of chaos right outside Downing Street, is that they wanted to know the timetable of when the prime minister would actually step down. Now, he's resigned, but he has also said that he will stay on until a new leader is found. This could take weeks. This could, of course, take months. The initial plan was to get it done by October when there's a party conference. Now, speaking to MPs, they want him gone now because this is different from when David Cameron resigned and stayed on as caretaker. This is different from when Theresa May stayed on as caretaker. This goes to his character. This is a concern about ethics, and so a lot of people just wanted him gone full stop.
Francine, more than anyone I know, you have interviewed the players involved in this drama. Which individual are you most focused on for this Thursday and into the weekend?
Two things, Tom. First of all, we need to look at the contenders list. Now, there's about 7, 8 people that for the moment are in pole position. They're very different. Some are charismatic. Some are considered as a better, a safer pair of hands. So we look, of course, the contestants. But I think of the Bank of England, because if you look at the cost of living, if you look at rampant inflation at a 4-year high, and the pressure they have in trying to control that without trying to tilt this country into deep recession, you don't have a government. You don't really have a government that's working. Sure, number 10, 2 minutes before that speech, appointed a number of ministers, a number of secretaries to take over. But the concern, if you're the Bank of England, is that you see this void politically and you wonder what that means for your economy.
Well, Francine, you'd have to figure out whether we get a shift in fiscal policy, and I think at this point it's probably impossible to do so. You're in contact with the Bank of England in a way that we're not. What are you expecting Governor Bailey and this Bank of England to do in the future?
Well, I mean, the problem, John, as you say, is that actually we absolutely have no idea fiscally what will happen. We were expecting a big speech. Initially, Boris Johnson, Rishi Sunak. When Rishi Sunak resigned, it was Boris Johnson and the newly appointed Chancellor for next Wednesday. Now that Boris Johnson has resigned, if he even stays on as caretaker, we're not going to have that speech. So fiscal policy at the moment is completely upended. You don't exactly know what they'll do also with wage increases for public policy. And so how do you set interest rates in this kind of environment? Remember, you and I also talked about this. The Bank of England, in guiding the markets, talked about being more forceful. We heard from the chief economist yesterday that they're maybe ready to hike interest rates at a bigger pace, certainly that we were expecting a couple of weeks ago. But when you don't have a working government, when fiscal policy is up in the air and you don't know whether taxes go up and down, how difficult is it to set monetary policy for an economy that you don't fully understand?
Incredibly difficult. Francine, great work over in Westminster, as always. Francine Lacqua on the latest with the British Prime Minister, announcing his resignation just moments ago. Here in Washington, D.C., I'm pleased to say, still close with us, is Bloomberg's Anne-Marie. AMH, this Prime Minister criticised for his conduct domestically. You've talked about how he's been received on the international stage. Just walk us through piece by piece a legacy, I guess, for this Prime Minister on the international front.
Well, honestly, just getting back from the G7, the Bavarian Alps, he was almost the class clown of the G7. He's picked up on hot mics talking about we need to show Putin we're tough, let's show off our pecs, take the jackets off, no ties. And it was all almost a little bit of fun and games. And I think that is how he's perceived by international leaders. But again, they have to work with the United Kingdom, especially the United States, a special relationship. They will not make this personal. They'll want to make sure that they're there for support for the British people and the next leader.
The war is not stopping. The struggles of Brussels is not stopping. I believe we'll speak to Maria Tadeo here in a moment. What is the timeline you perceive for them to fix this problem? It can't be much more than days, right?
Fix the UK problem or fix Ukraine?
Fix the Prime Minister problem.
Well, there's a slew of candidates. We don't even know who the front runner is. He's going to set up, have a meeting Thursday, we hear, with his interim cabinet and decide how they're going to continue the next few months until they get a government.
How do they do this? How do they?
The issue is he's going to become a lame duck. How does he get anything done in the interim?
Domestically, there will be pressure perhaps for a change. On the international stage, and I think the Prime Minister has gone out of his way there to suggest that there will be no deviation in British policy. In the meantime, if he remains as a caretaker Prime Minister, and I have no idea how long that will be, and once he hands over to new leadership.
John, we are trained. Civics 101 in America. Sure. There's a president, there's a vice president, I believe it's the Speaker of the House, yes. And then Anne-Marie and I flunked the 5 people after that. What's the equivalent in your world?
This is not a presidential system. I'm not sure how many times I've got to say that this morning.
It's a parliamentary system.
It is not a presidential system. You will change the leader of the Conservative Party, and therefore you will change who is the Prime Minister. But ultimately, to expect a deviation in foreign policy at this point, I would be shocked if you had any deviation whatsoever on the key issues of this moment. And AMH, I believe that's the point you're trying to make this morning, that if you're the Ukrainians waking up and the Prime Minister is gone, I can't speak for President Zelensky, but he's on the record repeatedly talking about his partnership with the Prime Minister, how close the two of them are, how thankful he is. But how worried would you be that you're going to get a change of course, a change of policy from this from the next Prime Minister, this government?
The aid's not stopping. The aid will continue to flow. Boris Johnson had something very charismatic and special, I would say, with President Zelensky. While you have Olaf Scholz and Macron wanting to continue that dialogue with Putin, Boris Johnson was not on that page. He came out emphatically, constantly bashing President Putin.
On a plane to Indonesia, Liz Truss, foreign minister for the nation. Is she one of the candidates?
Possibly. Tom, throw everyone's name into the hat.
Really, you do that?
I've got no idea. You have to put yourself forward. The Conservative MPs will decide between themselves how to whittle that number down, and then it goes to the membership.
And remember 2016, everyone thought it was going to be Boris Johnson, and then Michael Gove
had something to say about it. So I'm not going to make any predictions because I think British politics at this point is impossible to predict. Anne-Marie, good to see you. Has Anne-Marie brought me a hot chocolate?
I did. I ordered a hot chocolate. I ordered you bacon.
And what's so sad here is this glorious hotel, the Hay Adams, folks, is where we are with all of the history of the Hay Adams. I looked in the menu, room service, there's no Tang.
There's no Tang.
There's no Tang here.
I wonder why.
I was absolutely shocked. We're going to digress here from this truly historic moment again, and we'll continue our coverage from London. And we do so on the effect of pound sterling. Ibrahim Abari is a student of British politics and a student of what the markets speak of that. He's global head of foreign exchange analysis at Citigroup. Ibrahim, good morning. How do you link pound sterling gyrations into the UK politics of the moment?
Great to be with you. Great to be with you, Tom and John. And we think politics matter at this moment. They matter for the British public, they matter for the international community, as you discussed, but they definitely matter for financial markets as well. And unfortunately, that uncertainty that will linger over who will be in charge of the British government is yet another negative. But I should stress that the drivers of the sharp depreciation in the pound, 12% or so this year against the dollar, they haven't really been political. They've been in the context of broad dollar strength, and it's been the economic weakness of the UK that's been driving that double-digit inflation, and also the fact that UK growth has been among the lowest in the G10, and there's no change in sight. So we think this is an aggravating factor, but we don't think that political developments will drive the pound in any particular direction. And as you see, today, maybe the resolution of uncertainty is a slight positive, even though we don't think that will last.
Ibrahim, where are the points that you see in currency pairs that would suggest policy intervention of a dollar too strong? Give us an idea on euro as compared to dollar, or sterling compared to dollar, or even dollar compared to yen. Where is your target point where there would be policy intervention?
Well, we think that there are two types of policy interventions. So we think the most relevant element of the so-called reverse currency wars is that as exchange rates have been weakening while inflation has become a bigger concern, that's been pushing central banks to tighten policy or intend to tighten policy faster. And we've seen this across the G10. So that point of intervention is already with us. We've seen many central banks at least up the pace of rate hikes to 50 basis points, which is now the norm, at least for the second rate hike in G10. When it comes to actual FX intervention, the bar is much, much higher, and it's particularly high if these economies are part of the G20. So we still think the yen is the most plausible among the majors, but we think that's north of 140 in dollar yen, and it looks less and less likely that we will get there in short order. So for now, we think that points of intervention are far away in the major currencies, but we've seen a number of emerging market currencies, of course, being intervened in. So usually you would expect more FX intervention in those currencies, and we think that will find its continuation as we think more dollar strength is still in store.
If you are just tuning in, about 20 minutes ago, we heard from the Prime Minister Boris Johnson announcing his resignation. Many of you have been anticipating that moment in the last 24 hours, the pressure building on him, the momentum building much more so earlier this morning. What we don't know is the timetable for this leadership transition. The Prime Minister saying moments ago that we would get one perhaps next week. Ibrahim, looking at this FX market, something that both Tom and I, Lisa too, is unfortunately not with us today. We've been trying to work out whether central bank rate hikes are positive or negative for sterling or the euro. What we know, it's almost guaranteed in our future right now, is that the ECB will hike interest rates, that that the Bank of England will likely hike interest rates. And Ibrahim, what I don't know is whether that will be supportive or have the opposite effect on the currency or not. What's your interpretation of that?
So as you say, it's in fact not at all straightforward. When you see central banks hike rates because it's in the context of a stronger economy, it's an unambiguous positive. But in places like the UK and the Eurozone, you're really trying to address multiple challenges, and you're picking the lesser of at least two evils in many cases. So in the case of the Eurozone, you have to hike rates while keeping fragmentation under control. In the case of the UK, you may be forced to hike rates faster, really to bring inflation under control, but growth is likely to slow even more. So in both of these cases, I think we will come to a point where the exchange rate is so weak that rate hikes will be stabilizing. But in the short term, we don't think rate hikes can do very much at all to bring the value of their currencies up.
What a problem they've got. Ibrahim, thank you. Ibrahim Ragbari of Citi. Atika, I think this is the biggest problem right now, that currency weakness seems to be getting more currency weakness for the UK, for Europe too.
I'm going to partition it out as Citigroup and others do as well. You've got G3, Euro, yen, and dollar, and then you go to developed economies, what Dr. Rabari follows, but also off of that is something that we have not spoken of and I think is off the radar, and that is EM dynamics, and they're exceptionally fragile. It was Sri Lanka most visible and as such, but in India as well, efforts in the last couple of days. The EM dynamic now is something into July we're at risk of ignoring.
Let's get the response from Brussels. We can catch up with Maria Tadeo over in Europe. Maria, I want to come to you and get the European response to what took place about 25 minutes ago.
Well, it's very muted. We really haven't heard from any major leader react to this. When you look at the European institutions, they've said in the past hour, nothing in principle changes. We'll stick to our rules, which are, we'll look at the details of the deal that we signed and we'll continue to defend those. So a lot of this, of course, is this idea the Europeans like to play up. This is another day in UK politics. It is very messy. They always say, and this reinforces the messages that Brexit unleashed forces that have made the UK very unstable, and therefore it makes a bilateral relationship between the EU and the UK unstable by nature, but they do watch and they clearly care about it. The other thing that they, I presume, will be paying attention to is the woman or man that replaces Boris Johnson. But again, this will reinforce their thinking that they should not be flexible when it comes to changing the deals or parts of it, because they believe, imagine just 2 weeks ago, Mr. Šefčovič, who negotiates on behalf of the EU, had agreed to reopen the Irish protocol. Who's he going to negotiate now with in the next 2 weeks? Who is that person that he needs to deal with in the UK? So again, it reinforces this idea from the Europeans that we sit tight and don't move.
I mean, Maria, with a trip from Bavaria to Madrid, across all of that is the chaos of European politics, the shock of Macron that Adam Posen mentioned earlier, some autocracies in Eastern Europe and such, and now this historic moment for the United Kingdom. How would you suggest Mr. Putin sees this through the Russian prism?
Yeah, and he'll see what looks like, in principle, a mess. And remember, this is very important to actually stress this point. Ukrainians love Boris Johnson. Alongside the Polish, he is definitely top one. They love him. They love the way he talks about Russia. They love the fact that he's so tough on Vladimir Putin. And if you ask the average Ukrainian, do you know who Boris Johnson is? They'll tell you, yes, he's the UK Prime Minister. I'm not sure if you ask about Mario Draghi, perhaps in Italy, or Olaf Scholz in Germany, that have the same kind of response. I think for the Russians, they would look at it as the political mess that comes sometimes with European politics. But the reality is, behind the scenes, nothing will change. The sanctions, they stay on. The policy is not changing, presumably. And of course, for the Russians, it's the weapons flow going into Ukraine, which for the time being, nothing is going to change on that front. So it is perhaps a political debate, but in reality, not a lot is going to change overnight.
Maria, thank you. As always in Brussels, Maria Tadeo. That last point for Maria, Tom, I think it's lost on a lot of people just how well appreciated he is in that country, in Ukraine, by the Ukrainian leader Zelensky as well.
It's always as he's touched on the Churchillian spirit, or how at least he sees it. One of his heroes, Winston Churchill, and it's not that he mimicked it or mirrored it, but he touched upon it within all of his study of history as well. I think a lot of Americans don't appreciate this. We need to make this clear. There's some distinctions here with President Trump. This guy was a real student. He was, superb intellect.
We'll move away from the United Kingdom now, Tom, and back to the United States. In the next couple of hours, we'll be catching up with Heather Boucher of the Council of Economic Advisors, Brian Deese, too, of the National Economic Council, the director. All of that coming up, Tom, in the next couple of hours. And we need to talk about policy here at home in the United States and how they tackle problem number one. And problem number one is inflation. Without a doubt.
And how it folds into all the rest of the story, but inflation up in front.
Tom, I said repeatedly at the start of the year that I thought the timetable might be on their side, that as this year progresses, that this inflation story may kind of whimper out a little bit. A lot of people are on the same page as that. Here we are, midpoint of the year. I can't give them that anymore, Tom. I don't know if the timetable.
Well, and this gets to the separation of core versus headline inflation. The American public doesn't care about core inflation.
You can't eat core, can you? You can't travel to work on core inflation. From Washington, D.C. this morning, good morning. With Tom Keene, I'm Jonathan Ferro, with futures up 0.4% on the S&P 500 and crude. Maybe this is a welcome one from this administration. Sub 100.99. This is Bloomberg Surveillance.
Of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja, belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
the Fed keeps going 75 basis points a clip for an indefinite period, we will have a recession soon.
The Fed may need to slow down its rate hikes sooner than later.
It's not yet time for the Fed to say that they've accomplished their mission.
What we want here is monetary and financial conditions to tighten.
We're not looking for an imminent recession. We are looking for a notable slowdown.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene today from Washington. We welcome all of you worldwide and across this nation. In this hour, we will speak to members of the White House staff, but in this hour also, we will digest a change in the United Kingdom. John, truly an historic day for your United Kingdom.
Just 30 minutes ago, the Prime Minister of the UK, Boris Johnson, standing outside number 10 Downing Street, approached the podium straight out the gate, announced his resignation. What we didn't hear, and that's important, we didn't hear the timetable for the leadership transition. The Prime Minister told us, Tom, we may get that next week.
It is a world in disarray. We make jokes about it, the drama of it all. What is the next process within the parliamentary system?
Ultimately, Tom, what's got to happen here is the Conservatives within themselves, MPs, have got to work out who they're going to put forward to the Conservative membership, the membership in the British public, to make a decision who's going to be the next leader. So you've got to go through point 1, then point 2, then once you get a vote from the Conservative membership on who that leader is, then we have a Prime Minister to lead that party with a majority in the House of Commons, and ultimately that's when the pressure will build to announce an election.
We're going to get to
There's a few steps before we get there, Tom.
We're going to get to a data check here and a good conversation with Patrick Armstrong, but first, John, the backdrop of this is we will hear from the White House in this hour and also in our next hour is inflation. It's nothing like what Boris Johnson sees in his United Kingdom.
Similar headline numbers, but ultimately the domestic pressure.
Why is it different
for this president? Why is it different for this president? He faces midterms at the end of the year. Midterms at the end of the year. For his party, who are going to, at this point, Tom, if the numbers stay where they are, they're going to be in a little bit of trouble. How do they approach this issue, number one? And do they have to at least give up some of their foreign policy goals to achieve something domestically? Number one for me...
I don't understand how they achieve something domestically.
Number one for me is China right now. This is an administration that has come out and accused the Chinese Communist Party of genocide. This is pretty serious stuff. And at the same time, there's been reports on and off over the last several months that this president, this administration, is considering removing some of those Chinese tariffs. How do you make that palatable at home when you are accusing those very same people of genocide? And this was a report from Bloomberg earlier this week that potentially you remove some of the tariffs on goods. Some. And then you double down on the effort elsewhere. So we need to work out the nuances, but also we need to work out whether they're going to do anything. I want to say this, Tom. How many things have you heard in the newspaper, the Washington Post, the New York Times, here at Bloomberg, with our great reporting, of course, little things getting floated here and there, a rebate card, perhaps asking the Saudis to do something on output, removing Chinese tariffs, doing something on tuition, and all of the above. Just piece after piece. But how many things have you seen that have actually been executed?
No, these are what we call trial balloons.
But how many trial balloons have we had, Tom?
Trial balloons are going down in flames. They're bursting like fireworks on the 4th of July.
Is that what's flying above us, behind us, trial balloons, constantly?
Those are trial balloons tried by theory and practice. It's original right now, and that comes back to Jobs Day, which we will see tomorrow, claims coming up in this hour with Michael McKee, and that is the one trial balloon for every politician going back to Gladstone in the United Kingdom and Lincoln in the United States. It's about jobs, and it's a fully employed America.
Look at that number, 268 for tomorrow. 268 is the estimate. I have no idea if that's the number we get.
Non-farm payrolls.
Non-farm payrolls. Right. But Citi and others believe, with those kind of numbers in this labour market, for that reason, this Federal Reserve is going to stick with us. Stick with it for quite a while, because the numbers from the labour market
you're more up to speed on this
decent.
than I am. Hollenhorst at Citigroup led.
75.
I'm going, he's still on 75. Is that a front-loading 75 or just part of an organized path?
75, and perhaps you gradually come down to, say, 50, then 25, but there are banks out there that still think they get Fed funds to fall. There are many banks out there that still believe that.
Let me give you the nuance of the data check. John will dive into some of the details here. And to me, it's further inversion today, a little bit of yen weakness as well. But for me, the quiet headline that John mentioned in the last hour is an equity market that is on bid. It's a quiet on bid. And I thought Anthony Dwyer was fascinating in the dark of a Washington morning, talking about you've got to find where you step into a summer rally.
We've had 3 days of gains. This would be day 4. We're up 0.4%. These are small moves in the context of what we have seen so far this year. There's a major hurdle. There's 2. They start next week. CPI July 13th, then on to earnings season. JP Morgan kicking things off unofficially. The earnings will be the difference, Tom, between what we get in the back half of this year, more losses still to come, or a resilient earnings story that generates some gains. And that's the difference, I think, on Wall Street at the moment, with JP Morgan bullish, Marko Kolanovic, and then you've got Mike Wilson at Morgan Stanley, much less so.
Helping us out this morning with Plurimi Wealth, Patrick Armstrong joins us, the Chief Investment Officer. Patrick, we have seen a political crisis this morning. Can you help me with how you adapt and adjust to the bet in stocks and bonds on the United Kingdom?
I think it's almost a non-event in the big picture because what's happening today in the United Kingdom, it's driven by global events. Domestic policy is almost impotent given the backdrop of what we're facing globally. I don't think there's any populist play that can get promoting a big regime change, basically. So we're going to get a new conservative leader who's probably a little bit more strategic, less tactical, but we'll focus on some of the longer term issues that need addressing. But I don't think anything changes wholesale other than we maybe get a little bit of a steadier and one who's a little less blundering. I think Boris Johnson would have been a very good prime minister in a lot of circumstances, but he's faced an incredibly challenging time as well.
Patrick, as we work our way through summer here in Washington, I want you to take me out to winter in Europe if you can. Can you give us an idea of what we should be anticipating with this economy this coming winter?
Yeah, it's going to come down to Russian gas supplies, and if there are any, it's a very steep manufacturing recession in Germany if Russian gas doesn't get into Europe, and if there's prices like the electricity forwards are in Europe. So you're in recession right now in Europe, and I don't think that changes anytime soon. Winter is when things are going to be worst. It's very difficult to imagine a scenario where you do get electricity back on very quickly.
This is so important, Patrick. I need to interrupt, but John, I want to bring you into this as well. How do you have a recession policy in any area, let's pick on Lagarde's Europe, if you're enjoying a fragmentation study? It's nonsensical.
You've touched on the heart of the problem. Patrick, if we're in recession in Europe right now, and it could get worse later this year, how is the ECB going to hike interest rates into that story?
I think they have to get to zero as quickly as they can, and then they're sitting on their hands. I don't think going back to negative interest rates really will get the European economy out of the recession that it'll be in anyway, but just getting towards zero. And then that hiking cycle Lagarde alluded to in her last meetings, it's not going to happen, if I'm right, and we're in a big manufacturing recession, because that's going to lead to job losses as well out of Germany.
To the present gloom, crisis, and cacophony, Patrick Armstrong, can you acquire shares today? Can you be optimistic about buying quality blue chip stocks?
Well, actually, I think you can be, because my view is that the Fed blinks. The U.S. might not be in a recession and maybe on the cusp of a recession. As the Fed sees its interest rate hikes pushing the U.S. into recession, I don't think Powell has any intention to create a big jump in job losses that would basically get rid of the inflation he's worried about. I think as long as inflation's plateauing, which I think it is, you see commodity prices having rolled over already, I do think the Fed can ease off on things and not get anywhere near the levels that their dots are at, but still have some credibility because inflation's on a downward path. Job growth is slowing. Demand-led inflation is slowing, but inflation persisting significantly above the Fed targets is where I think we're going to get. So I think that's a bullish thing for markets. And I actually think China is going to have a really strong second half. At some point, they'll declare victory on COVID, the zero COVID policies. They'll just have to say we've won. We don't need these anymore. And that's massive incremental demand. And that's something that people aren't ready for right now. So those are both positives. You combine that with very negative investor sentiment, you can see a sustainable rally from those three things.
Patrick, I want to pick up on two of them. One's China. I've got no idea what the Chinese Communist Party are going to do, and of course, you've got to put money to work. That would be my point on that. On the Federal Reserve, you said the Fed will blink. Can you give me a deeper understanding on what will the trigger be? What will the trigger be for this Fed that you think will blink?
I think it'll be an acknowledgement of the economic realities that the country's facing, and as job growth slows, you've got unemployment at 3.6%, you've got wage growth at 5.2%. It's hard to imagine a significant recession because 70% of the U.S. economy is consumption, and Americans are fully employed, they're getting pay rises. If that does start to weaken, I think the Fed, as long as inflation has plateaued and comes down on a couple of months in a row, still incredibly elevated levels, I do think then they start to slow, saying our policies are already starting to take effect. And they've got to think in a global context as well, that if Europe just gets to zero and doesn't hike, the relative hiking they're doing is still creating a very strong dollar, which is going to reduce inflation for them as well.
Hey, Patrick, good to catch up. Patrick Armstrong of Plurimi Wealth there. Patrick, thank you. TK, you've mentioned this repeatedly. He made 3 points there about why he's constructive. Let's pick up on point 3, China. How many times have you brought that up now? China.
I believe in this. I believe in a Pacific Rim recovery. Jay Polanski, is it, who appears on your 9 o'clock property?
Does he not appear with you?
He doesn't appear with me because he loves to appear with you. I don't know what that's about, but it's great. For radio, for television worldwide, here at the Hay Adams Hotel. It's a summer book reading, folks. Summer book reading for you on John Hay in his tenure with Theodore Roosevelt.
Is that your book of the year?
That's my book of the summer.
Coming up, Heather Boucher of the Council of Economic Advisors and Brian Deese of the National Economic Council in the next couple of hours on Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. It's official, Boris Johnson has now resigned, but the British Prime Minister isn't going away yet. In a speech outside number 10 Downing Street, Johnson said he would stay on as a caretaker leader until a new Prime Minister is in place. A timetable for the process will be announced next week. Johnson said he spent the last few days arguing unsuccessfully that it would be wrong to have a change of government. FBI Director Christopher Wray is escalating a dispute between the US and China over hacking. Wray warned Western companies that China aims to ransack their intellectual property so it can eventually dominate key industries. He told an event in London that Chinese spies are snooping on everything from Fortune 100 companies to startups. A forecast indicates that last month, U.S. employers added the fewest jobs in more than a year, but economists say the slowdown isn't concerning, at least not yet. The jobs report comes out Friday. It's expected to show the unemployment rate remaining at a historically low level and another month of solid wage growth. The U.S. and its allies are exploring ways to limit Russian oil revenues without hurting their own economies. Bloomberg's learned they've discussed trying to cap the price between $40 to $60 a barrel. They would do that by banning insurance and transportation services needed to ship Russian oil, unless it is purchased below an agreed price. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. This week, June jobs are in focus.
I think we're all very curious how June jobs came in.
The labor market is tremendously strong.
We have never been in a recession with declining unemployment.
This Friday, the surveillance team will bring you crucial data and expert analysis at terminal speed.
There's so much uncertainty. We're going to have to monitor the data closely.
Everyone needs to recalibrate at 8:31 a.m. this Friday.
The June Jobs Report, Friday on Bloomberg Television and Radio.
This prime minister who thinks he's a president has caused untold damage. The Brexit situation by doing brinksmanship with the EU over Northern Ireland was huge. It undermines trust. It undermines certainty for investment. It shows how damaging Brexit is.
That was Adam Poston, the Peace Institute president, just a moment ago. An hour ago, we heard from the British Prime Minister, Boris Johnson. Prime Minister no more. In our future, a new Prime Minister stepping down. And Tom, what we don't know, and I think it's worth emphasising, we don't know the timeline for this leadership handover, if you want to call it that. The Prime Minister suggested in the last 45 minutes we'll find out next week.
Well, he said we'll find out next week. You got to get to the weekend. And, you know, they don't do Sunday talk shows, I don't know, in London. But I don't understand how do you get to the next week. But how do you get to, okay, what are they going to talk about there? How do you get to next week? I don't see it.
We've got to game out who the next Prime Minister is. And from there, Tom, game out when, if we get an election this year or perhaps next year, Tom. No idea.
I'd make jokes about it, but this is a really serious moment for this nation.
Serious moment for this nation. I agree with you. But I've made this point once this morning, and I'll make it again. For the rest of the world, do they bat an eyelid? Seriously?
No, it's theater.
It's theater.
We talked about it.
Precisely. Because when it comes to the hierarchy of issues right now, Tom, This doesn't feature.
Well,
this doesn't feature.
We're going to dive into this, and we do this with two guests from the White House coming up here in a bit. Anne-Marie Horton is with us here in Washington. We greet all of you. For those of you on radio, one of the truly great vistas of Washington, the Hay Adams Hotel overlooking Lafayette Park, and then, of course, the White House and onto the Washington Monument, the Jefferson Memorial. She doesn't have all that in London. Lizzie Burden is solely and singularly at a somber 10 Downing Street. Lizzie, what is next for Prime Minister Johnson?
Well, he says that he's going to stay on as a caretaker. As you say, that there'll be a leadership contest later in the year, and the timetable is going to be set out for that next week. But you were asking whether Boris Johnson could even survive as a caretaker. Let me read you a tweet from Dominic Cummings, his former aide. He says, we're in for a nightmare if he's allowed to squat in number 10. He said the speech blames everyone else, thinks he's the real victim, and sets up a betrayal story for future Telegraph columns, his former job. So the pressure really will be on Boris Johnson. There are many people who would have preferred his deputy PM, Dominic Raab, to have taken over as a caretaker.
Right. How will the Labour Party respond? What does Sir Keir and the others do of the Labour Party to adapt and adjust to what we saw in the last hour?
They could call a vote of no confidence in Parliament, but of course it would take the Conservatives to get on board with it, to have the numbers to oust Johnson that way. The Conservative MPs will be hoping that enough of them can get behind a new leader. But even if they pick a new leader by October, that person will only have 14 months before a general election to get a new agenda together. So they're going to have a difficult time as well.
Lizzie, wonderful to catch up with you outside number 10 Downing Street. Lizzie Burden. Anne-Marie, how many times have you seen this movie now in the United Kingdom? This is the sequel.
This is the sequel. This was, I mean, when I moved to the UK, the big thing was the Scottish referendum. Then, of course, it was Cameron's referendum, Brexit, and now this. And even the contest in 2016 for who was going to be the Prime Minister was really combative. So, as you say, it's a different situation. The Conservatives will have the party. Not much exactly changes, but who is going to lead that? It's anyone's guess. It is a little bit of a show.
There are a few more votes to come. There's going to be a leadership contest, then there'll be potentially an election. I have no idea when. Let's talk about what we do know. There will be an election later this year, a series of elections right here in this country. What does this White House need to do? What can they do? Perhaps that's the more important question ahead of those midterms.
They need to bring inflation down. And it's difficult, right? Because they're putting all this pressure on the Fed to do it. At the same time, right now what they do have in their favor, and they like to tout, is strong growth, low unemployment, and with the Fed hiking rates, you already see the Fed projections, all of that potentially could start to diminish, and inflation can still be high.
Right.
So gasoline and food prices.
A delicate question, particularly with two guests coming up from the White House. Describe in the White House the advisory around the president, and then the experts that he has on economics or energy or on other matters of public policy. Is it such chaos that they can't be heard?
So what you have is a very tight-knit group close to the president, obviously his chief of staff, Ron Klain. Then you have Brian Deese, who you'll be catching up with. Looking forward to that conversation. And then you have the experts like Treasury Secretary Janet Yellen, which we've written, Saleha Mohsin, a deep dive, how she's been really almost ostracized and only comes in when she's invited. And is that really always the case?
Can we sit on that for a moment? You have got one of the most remarkable labour market economists on the planet who has been invited to take a job that we understand from a lot of reporting that she was resisting. She takes that position and is not part of the conversation in a big way in the White House?
That is the reporting, yes.
What's the why on that?
She doesn't have like the political acumen that you would normally get from a Treasury Secretary. She's not going to walk out of the department and into the West Wing and demand a meeting with the president. She's going to wait until she's asked to give her opinion, and they don't always ask for her opinion.
Who did they think they were hiring?
Well, that's exactly the greatest question, because you can see in her public display, she's still very much a Fed chair almost, right? She's not a political creature of Washington. She's an intellectual and she's a Fed chair.
What is the power of the progressives right now? Certainly they had a very strong 100 days with the president, even taking it further than that. Is there a nuance there and recalibration? The liberals, as they speak to their president, what's the new calibration?
Depends what the issues are. So when you look at things like energy, the progressives are not winning. This administration and Democrats need more fossil fuels on the market. They need to bring gasoline prices down because the most vulnerable in society are suffering. But then you look at an issue like Roe v. Wade. The progressives say this White House is not doing enough. Yes, at NATO, the president said he would back editing the filibuster for this rule, but you have liberals and even some Democrats coming out saying you could do more, allow abortions on federal lands, pack the courts. They will not do that.
Anne-Marie Hawthorne, AMH. Thank you for this administration, Tom. Wow, is there a lot of work to do? What can they do? I think that's the more important question when it comes to inflation.
What can they do?
What can they do?
They can look at the calendar. That's the number one thing they can do.
Do you think that's
the
still on their
calendar,
side?
The calendar is moving very fast for President Biden.
Coming up, Heather Boucher of the Council of Economic Advisors and Brian Deese of the National Economic Council, the director, will be joining us in the next hour. We'll catch up with both of them, with Tom Keene. I'm Jonathan Ferro. Bramo enjoying her vacation, I'm told. TK. She'll be back next week. Future's positive. And this is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Crypto
you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Live from Washington, D.C. this morning. Good morning to you all. Together with Tom Keene, I'm Jonathan Ferro. Moments away from economic data in the United States of America. Jobless claims just around the corner. Then on to tomorrow with Payrolls Friday. Teed up looking for 260-something thousand jobs in America for the month of June. Mike McKee standing by with some breaking data. Let's get straight to him. Morning, Mike.
Good morning, John. Well, first breaking data is trade. The trade balance comes in May at negative $85 billion, 85.5. That is a little worse than the preliminary estimate of 84.7. So that is a little bit worse in terms of GDP. Now, the jobless claims numbers, 235,000 last week. And that's just a touch up from the 231 initially reported the week before. But on the other hand, it is continuing the trend higher. And that is going to be a bit of a worry for the administration and for the Federal Reserve, because the jobless claims numbers are sort of the canary in the coal mine. We don't see recession unless jobless claims rise significantly. And so they are not rising significantly, but they are rising, and that's been a trend for a couple of months now.
And Mike, typically when they start to do that and do that excessively, it's too late. It's too late and the canary is long gone. So can you tell me what this Fed will actually be responding to?
Well, they're just going to put it all together, John. It's not going to be any one indicator. Of course, we get jobs tomorrow, and we'll see where we are with participation and unemployment. And then we get the CPI the following week. They don't follow the CPI for their mandate, but they will take a lot of information about where inflation is going. They've got to figure it all out because, as you say, once the data starts showing we have a problem, it's too late. So they've got to see what it's trying to tell them about what's going on. The hard thing about jobless claims in this situation is that they have been so low for so long in a way that we had not seen before, except for the spike during the pandemic, that it isn't clear exactly what the signal is. What would be a normal level for this time?
Michael McKee, spanning here in Washington from the Economic Policy Institute to say the Brookings Institution or over to something like Heritage, more conservative. Can those three think tanks say it's a fully employed America?
I think there's no question it's a fully employed America. We are still looking for 11 million jobs, according to the JOLTS report yesterday. And the ISM services number was interesting because it was in negative territory, 47, which should suggest contraction. But the problem, according to the businesses responding to that, was that they can't find the workers. It's not that they don't want to add, it's that there aren't people to work at this point. Now, we don't really know where the natural rate of unemployment is. The Fed thinks it's in the low 4s, and so they're sort of aiming for that as perhaps where they end up as they continue tightening. But we'll have to wait and see when when unemployment starts to go up to see if they change their minds or put any more precise prediction on it.
Mike McKee, looking forward to your coverage of Payrolls Friday tomorrow morning, 8:30 Eastern Time. Mike McKee there. Do you know that clashes with the tennis, I think? Doesn't Rafa play at 8:30 Eastern?
Who?
You don't know who Rafa is?
Rafa?
Okay, futures positive on the S&P. I'm going to pretend that didn't happen. On the S&P 500, we are positive. 3 days of gains on the S&P. He knows who Rafa is. Off the back of today, we could have day 4. We are positive a third of 1% on the S&P 500. Yields higher by about 3 basis points. This is the bounce back we've got in treasuries.
Right.
Approaching 3%, Tom. That curve still inverted. 2s versus 10s, negative 4 basis points or so.
Not much off claims, but there's a trend as well. And again, oil, 99.59, I think is front and center as we speak to the White House here in a moment. We welcome all of you in Washington today. John Farrow and Tom Keene, Lisa Abramowitz is off. And we drive forward the conversation now on a fully employed America and the mystery of these times in labor with Stephanie Aronson, head of economics at Brookings. And of course, a Brookings institution that stopped the world of think tanks a number of years ago when down one hallway you had a shingle that said Bernanke and a shingle that said Yellen as well. What was it like for you to wander in on a daily basis and have a cup of coffee with the Bernanke-Yellen axis?
it's funny because I'd had the opportunity to work with both of them when I worked at the Federal Reserve, and then to see them in this context was really a treat. I once was at a talk where Bernanke once said, I announced him, introduced him at the conference, and then he said, Stephanie used to work for me, and now I work for Stephanie. So
the acclaim of Chair Yellen, now Secretary Yellen, is this word slack, the measurement of the inefficiencies within the American economy. Many in society, including those that support President Biden, would say there is still slack in our labor economy. Is there?
I think by some measures there is some slack. In particular, the labor force participation rate is still a bit low relative to where we would think, even given the fact that the trend in participation is going down. But unfortunately now the Fed also has to worry about inflation. And so they can't, make the labor market perfect, I think, at this point.
If we can go back a couple of years, we were talking about getting back to where we were, getting that employment to population ratio back to where we were. Clearly, inflation has interrupted that ultimate objective that so many of these people had. But what has happened, do you think? There was a while, and I was part of the conversation, you had to ask the question, is it the benefits, the excess benefits we're sending to people that are keeping them out of the labor force? Doesn't seem like it was that. We asked that question a million times. What do you think it is? Mike McKee there just talking about the ISM services yesterday, saying that we don't have a demand problem. We still have a supply problem. Where are they?
I think one of the things is that when the pandemic hit, a lot of people were forced to leave the labor force. And then they made decisions that are keeping them out now. So people can decide to stay home and take care of their children or their elderly parents. They go back to school. And I like to say that these decisions are sticky. And so, even though maybe there were more opportunities in the labor force now, people have just changed their behavior in a way that is causing them not to look for employment now. It may be over time, if the employment continues to expand, unemployment rate stays low, some of these people will be brought back into the labor force, but that will just take time.
How high does the price need to go to change that behavior? I'm not talking about inflation, I'm talking about wages. How high does that need to go to ultimately get that supply-side response that we just haven't seen in a profound way?
Yeah, I think no one knows the number, but it's clear that workers in the United States are underpaid. They hadn't had wage gains in real terms for decades. And we're making up for some lost time now, but it's clear we haven't made up enough.
I got 8 ways to go here. I'm going to go to the laureate Paul Romer at NYU and the idea of technology and the impact of compensation, where executives now are salary and bonus, and you'd say over 15 years, they know they don't get that bonus if labor gets that pay raise. Are we at as Bullard would say, are we at a regime change now in labor and finally lower deciles can begin to catch up?
That's certainly what it has seemed like in the wake of the pandemic. I think one of the big questions is whether that will persist as the economy slows.
Well, but the basic observation, and John and I get tons of mail on this all the time, geez, we can't hire, name the job, shortstops for the Washington Nationals, whatever. If that's the case, just pay them more. If you pay them more, do they show up?
Workers show up if you pay them more. And I agree. I think you have identified a big puzzle. It's often in surveys of businesses, they say they can't hire workers. And then when the question comes to have you raised wages, they say no. What do they expect?
It's, to me, generationally bizarre.
With this in mind, what do you make of what the Federal Reserve is trying to achieve?
I think they're trying to achieve something very difficult. I think it's not impossible. Clearly they need to slow the economy in order to bring down inflation. Part of the problem is that a lot of the, causes of inflation right now are on the supply side. And the Fed's tools are not really good for lowering oil prices or food prices. All they can do is try to slow demand. So I think that it'll be difficult for them to do, but it's certainly not impossible.
I'm just bringing up their forecast for unemployment on the Bloomberg terminal, 3.7% for 22. For 23, it ticks up to 3.9.
Hello, traders. How are you today? I'm going to place an order to sell short Bitcoin. So for guys who hold in Bitcoin from price 60 or above, right now, we're day traders. I want to remind you that we're making money. We're not trying to hold for years and then to see what's going to happen. And right now, time to sell short Bitcoin. The price I'm looking to sell, 20,437. Okay? 20,437. Order placed. If you're looking to sell short, if you're looking to trade with me, here is your chance. 20,437. This is the price. You can sell and stay with me, Bitcoin. Stay with me. I will guide you through, and we'll close this trade together. Hopefully today, if we will get filled. Okay, guys. I'll speak to you later.
See if we're really, you know, the labor market cools, is firms are going to reduce their hiring.
Job openings.
And job openings should go down, and we know the Fed is counting on that. And then eventually firms do start to lay off workers, and the claims numbers will go up. You know, we've seen a little bit of an increase, but I don't put too much weight on that.
235, I mean, a bit of perspective here. 235 historically, Tom.
Well,
not even population adjusted. I mean,
you adjust for population.
You've got a very different number.
What's your favorite chart right now? What's the chart that tells the greatest story right now of the American labor economy?
I mean, actually, I have to side with Yellen here and say I really like the quits, because I think the quits rate says something about how confident workers are feeling in the economy. And the quits rate is high, and in May, the latest data we have, it kind of moved sideways. So the confidence is still there. So the confidence right now is still there.
They feel good about quitting their job, but ultimately they're not happy with the economy. Can you reconcile?
No, I can't. I go to a decile analysis. We don't have time for this, but I go to a decile analysis.
We should extend the show.
We should extend the show. Each decile is different.
Stephanie Aronson. Stephanie, thank you.
My pleasure.
Thank you very much. Coming up very shortly, we'll catch up with Heather Boucher, Tom. And then on to Brian Deese in the next hour.
These are going to be important conversations. It's a White House with tension right now.
A lot of tension, without a doubt about it. Coming up very shortly, Heather Boucher and Brian Deese from this administration, from Washington, D.C. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Boris Johnson bowed to the inevitable.
Okay, traders, as you can see, position opened on Bitcoin, just right here. Stay with me. We'll go through this trade together. Sorry, it's wrong. Arrow. And we'll close this trade. How it works, 1% will give us 1,000 pounds. Okay, guys? Stay safe. I'll speak to you later.
Bonds in the second half of the year. The bonds would be brought forward from next year's quota. A key commodities gauge has plummeted since reaching an all-time high a month ago. The Bloomberg Commodity Spot Index has lost more than 20% after setting the mark in June. Prices for everything from gasoline to wheat are slumping on concerns that a stagnating economy will hurt demand, and is the first indicator of just how much cash is flowing to the major oil companies due to the rising cost of gasoline. Shell says the soaring margins from fuel production may have added more than $1 billion to the earnings of its refining business last quarter. Oil prices have jumped 30% this year. And Samsung Electronics reported a better-than-expected 21% jump in revenue that helped drive a rally in Asian stocks today. Samsung is South Korea's largest company, and its results are seen as a bellwether for electronics demand. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Simply have a very strong unemployment situation, a very strong labor market that's continuing to fuel consumer spending, keeping the economy moving forward. Yes, real constraints out there on the supply side, obviously elevated inflation, but it is a more nuanced picture.
Jared Bernstein there, the White House Council of Economic Advisors, weighing in on the situation in the United States. If you're wondering what you miss in commercial breaks sometimes, Tom making academia jokes, is that right? Academic jokes? Is that your sense of humor?
We were talking about an academic institution far south of Manhattan. You know, I never get below 59th Street.
I'm aware. We're all
I haven't
aware.
been down there. It's like.
Are you trying to cause trouble with our next guest?
It's where the more leftist universities are.
Is that right? I'm going to get a quick check of the market, and then you can dig yourself out of this hole.
Looking forward to this.
Okay. Equity futures look like this on the S&P 500. Bear in mind we've had 3 days of gains on the S&P. Can we make it for Tom? We're up 0.4% as we count you down to the market open. About 45 minutes away.
We welcome all of you on radio and television worldwide and across this nation with 2 conversations from the White House as John Farrow and I visit Washington. Heather Boucher with us right now. To say she's a member of the Council of Economic Advisors doesn't describe how important her position is. Her book, Unbound, stopped economic traffic a number of years ago in looking at the inequalities of the nation, and she has an economic pedigree very different from most, including working at the University of Heilbronner and Bernstein, the new school of social research in Washington.
Did he dig himself out of the hole?
How are you treated by the fancy academics from fancy schools that wouldn't know the new school of social research if it hit them over the head?
Well, you know, in econ circles, I think what matters is, you know, how will we talk about the economy? And I think I have not experienced discrimination based on my pedigree.
We're not going to talk about jobless claims. That's inappropriate right now, given the policies of the White House. But we can talk about the state of inequality in this nation. When you speak to the president, when you advise others in the White House, what is the character of our labor inequality right now?
Well, one of the things that we've seen since the president took office is in large part due to policies like the American Rescue Plan, like making sure that we wrapped our hands around the pandemic and got the job market back in motion. We've actually seen that this has been good for addressing inequality over the past year and a half. What remains to be seen is whether or not we can continue those trends, but certainly the president was focused first and foremost on getting people back to work, and we know that for the vast majority of Americans, the vast majority of their income comes from their job. So if people have jobs, and especially jobs in an economy where wages are rising, that is core.
This is so important. We forget. We're so jaded in our Bloomberg world. If you're popping 200,000 or 300,000 jobs a month, non-farm payrolls, for any president, that's a success.
I would say the difference between Wall Street and Main Street, and there are many, let's be clear about that. On Wall Street, there's an addiction to trading off headline numbers and not talking about the disparity beneath those headline numbers. We hear phrases like the consumer's strong, the labor market is tight. Do you characterize those two things quite the same way?
Well, I think what we are looking at, and certainly what the Council of Economic Advisors is looking at more generally, is how many people have jobs? Where are those jobs? What does that look like for people? What is family economic security? Because that's the foundation of spending across our economy. You know, consumer spending is 70% of GDP. So making sure that we are attending to that basic fundamental fact. You know, the president has said it so many times now that his goal is to build an economy from the bottom up and middle out. And that's a promise that he has made to the American people and one that he is working each and every day to keep.
This is a difficult question to answer, granted, but I imagine you've done some research on this. When you look at incomes right now, particularly for lower income Americans, what proportion of that wallet are they now spending on energy? Just how bad is it out there for them?
Certainly. The high prices in energy and also food affect lower income families more so than higher income families because it's a big portion of their income, and it's also money that they have to spend. If you have to put gas in your car in order to get to your job, that's not something that you have a choice over. So this is one of the reasons why the president has prioritized doing everything he can to get inflation down and to doing everything he can to get gas prices down, noting that we are here because we've been recovering from a global pandemic that has led to supply chain challenges around the world. This inflation is global. It's not just in the United States. And of course, you add to that the war in the Ukraine that Putin is waging. All of these things are making it harder for especially moderate and low-income Americans.
What they can do is a question that we've been asking all morning. What can you do? What can you do to actually offset any of this pain for Americans right now? We've talked about the trial balloons that are floating outside the White House on almost a weekly basis right now. We've heard about a fuel rebate. We've heard about all kinds of things, removal of Chinese tariffs. Proposals that aren't being executed on, at least I haven't seen them. What can you do, and what do you expect to happen?
Well, so the president's been very clear in focusing on what he has control over. So one of the things that he did early on that I think has been incredibly important has been releasing oil from the Strategic Petroleum Reserve. So working with our allies around the world, making sure that oil was available in this time of need when we do have these supply side shortages. The president has also, over the past couple of weeks, been working with refiners. We know that one of the challenges is that many refineries, too many, shut down over the pandemic. Capacity has been constrained. The president is working and has asked his energy secretary to work with refiners to see what they can do to get things flowing again, but also noting that because of high oil prices, because of high gas prices, these folks are making a lot of money, so they have resources to make those investments.
Down the hall from your office in the White House is a political raging battle over, say, how to take Pennsylvania at the midterms, how to take Pennsylvania in 2024. All of that is about the rage of the middle class, either Republican or Democrat, over the inequalities, which you've written about in your acclaimed book, Unbound. How do we address in this nation the idea that technology benefits the haves? Technology maybe benefits all of society, but technology burdens and lowers the outcome, the standard of living for the great middle class. How do we make technology a friend of people that want to vote Democrat?
Well, a number of the things that the president has focused on are about that, and maybe your viewers don't quite see the connection. So let me outline a few of them. So one of them is early on, the president put out an all-of-government effort around market structure and competition. Let's make sure that markets are fair and that they deliver for the American people, including...
But I don't mean to interrupt, but this is important. There's a huge body of people of all political persuasions who feel it's rigged. It's rigged here at Lafayette Square. It's rigged in the inner Northwest District of Washington as well. How do we regain the trust of the middle class that institutions can lead to a better life?
You do it by delivering. So you think of some of the things that the president's delivered on just in recent months. Things like making sure that prices on ocean shipping are fair. So many of the things that we buy come on a ship that comes from overseas, but that process has been circumscribed by a small number of firms. So the president is using his tools to say, let's make sure that those prices that people are paying are fair.
Is he blocked by Republicans?
Well, so here's the thing. The executive branch does have a lot of power when it comes to enforcing antitrust laws. The president has made clear that price fairness is a #1 goal, and that feeds through the whole economy. And he's also prioritized making sure that if you are a worker in a market where there are few employers for your services, that those markets can be more fair, more open. And I think that's one of the ways that you can see the role of technology in the kinds of algorithms that affect who's hired, who's fired, what pay is. These are issues that the president is brought to the fore. But the other thing that he's prioritized day in and day out is allowing workers to join unions. That's one of the ways that we address inequality. It's one of the ways that we think about how the economy can deliver for working people and how it can be fair and build that trust through democratic institutions on the ground in workplaces all across the United States.
Keep hearing that word fair. And you and I have had this conversation before. It sometimes makes it sound like something nefarious is happening in certain places. The president over the weekend said this: "My message to the companies running gas stations and setting prices at the pump is simple. This is a time of war and global peril. Bring down the price you are charging at the pump to reflect the cost you're paying for the product, and do it now." Jeff Bezos came out and tweeted the following. I'm sure you read it. "Inflation is far too important a problem for the White House to keep making statements like this. It's either straight-ahead misdirection or a deep misunderstanding of basic market dynamics. I'm not going to accuse you of the latter. I want to talk about the former." Where's that messaging coming from?
The president has made clear that his #1 goal is delivering for the American people. We are in a time of crisis. We are in a time of war where the president and our allies, we are supporting the Ukrainian people. Congress is engaged in this effort, both sides of the aisle, to say this is an important priority. And one of the consequences is this high price of oil because of global trends.
But you didn't answer his important question. Everyone, Heather, everyone in the nation wants to know the answer to the question Mr. Farrell just asked you, which is who is advising the president on shockingly naive price theory over a gallon of gas?
So the president is not shockingly naive. And we are in this moment of global crisis in terms of energy, and he is using the tools at his disposal to make sure that the prices that people pay at the pump are fair. So what we know in oil prices is that the prices they can rise very quickly. It can take a long time for those prices to recalibrate and to come back down. And he's saying, do that faster. You have the capacity to do so. You're making profits. But the important thing is that he's using the tools at his disposal, given this very challenging situation.
Is this central planning now? Is that what this has come to?
How is that central planning?
Are we going to sit here and decide what's fair, what's not fair, and then go on Twitter and say this is unfair, bring your prices down? But is markets or is it not markets? Is it capitalism or is it central planning? Where's this White House going?
One of the things that the president has prioritized is understanding the way that concentration across markets has affected the American people and is affecting markets. We know when there are very few players, this is Econ 101. You know when there's a monopoly that there is more price-setting power. And that's one of the things that we know about what's happening.
Thank you.
Yeah.
Heather Boucher on Eco 101. Heather, fantastic to catch up with you, as always. Brian Dees coming up very shortly in the next hour from Washington. This is Bloomberg.
Welcome back to another special Wimbledon update from Bloomberg TV and radio from Tennis Channel. I'm Erin Coscarelli. The second men's semifinal is set at Wimbledon after Wednesday's quarterfinals in London. Rafael Nadal played through the pain barrier to reach the Final Four for the 38th time at the majors. The Spaniard received treatment for an abdominal injury in the second set, but went on to take out Taylor Fritz in the fifth set breaker. Nadal remarkably extending his win streak to 19-0 at the Slams this year and is now just 2 wins away from completing the Roland Garros Wimbledon double for the third time in his career. He will be facing Nick Kyrgios for a spot in the final after the Aussie got past Chile's Cristian Garin in straight sets. Victory against Nadal would put Kyrgios in his first Grand Slam championship match, but he trails the two-time champ 6-3 heading into Friday's blockbuster.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
If life were like web design and everything just broke down when there was too much traffic, you'd never put up with it. That's why we built Webflow, so you can make things work exactly like they're supposed to. Webflow, the modern way to build for the web.
What discount?
I'm just saddled with so much credit card debt right now.
I need an upgrade card. It rolls all my monthly purchases into one easy installment loan so I can avoid stuff like that.
Where do I sign up?
Get your upgrade card at upgrade.com.
This is an extended edition of Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from our nation's capital in Washington, D.C. Good morning to you all. Together with Tom Keene, I'm Jonathan Ferro. Bramo out of the building, Lisa back with us next week. A special hours extension for us both, Tom, on Bloomberg TV and on Bloomberg Radio going into the opening bell. 30 minutes away.
The opening bell, we're going to focus on the markets here, and of course, a really better equity market over the last number of days. But what we need to focus on is the gift in Washington of a Shakespearean drama in London earlier this morning.
Is that what we're calling it?
Yes.
How many Shakespearean dramas have we seen?
It was
in
Richard
London
IV or Richard VII. I can't remember which one it was. I used the Cliff Notes. But the answer is that was historic, what we saw this morning.
Prime Minister resigning, and we'll catch up with Francine Lacquer in Westminster in about 20 minutes or so. We need to talk about the interview we just had with Heather Boushey.
Yes.
Of the White House, and push forward to Brian Dees-Tom of the National Economic Council. We'll catch up with him in about 30 minutes' time.
They're talking points, and we were trying to get Dr. Boushey off the talking points of this is the plan, this is what we're going to do, with a nation that said, wait a minute, you had a plan, but you haven't done it. To give the president and any president credibility, we're talking 200, 300,000 jobs still being formed out of this once-in-a-lifetime pandemic.
And for that reason, many people on Wall Street expect this Federal Reserve to keep on hiking. We begin with the big issue, questioning a hawkish Fed.
The market is really pushing the Fed right now.
The Fed is telling us that they want to go to 3.8% by sometime in early 2023.
The Fed may need to slow down its rate hikes sooner than later.
The two-year yield is over 100 basis points below that level right now. This doesn't make any sense whatsoever.
How much longer is this rate hiking cycle going to last?
The bond market is saying that probably we peak at some point in December.
We know that the Fed are going to be hawkish now.
Is 75 basis points baked in the cake already for the July Fed meeting?
Absolutely.
But the market's more forward-looking.
They may top out at 3.5. I think it's going to be hard for them.
We've already seen that type of price dynamic.
The market has readjusted their expectations quite significantly.
The market can price peak hawkishness well ahead of central banks.
The latest Fed minutes suggesting they would have to raise rates even faster, perhaps by another 50 to 75. Officials zeroing in on surging prices and the potential for entrenched inflation. Mike McKee reads those minutes. Tom Keene does not. Mike McKee joins us right now. Hey, Mike.
I'll give Tom the Cliff Notes version. Guys, the mistake that economists and investors are making is quoting the Fed minutes in current time and trying to apply those to the future. There isn't much that you can say that has held steady since then. If you were going to take one comment out of the Fed minutes, it would be this. Participants concurred that the economic outlook warranted moving to a restrictive stance of policy, and they recognized the possibility that an even more restrictive stance could be appropriate if elevated inflation pressures were to persist. In other words, we're going to get it done. We're going to bring down inflation. We'll do what it takes. But they have told us that. the economy has changed since then. So I look at this quote, which people like to attribute to John Maynard Keynes. No evidence he actually said it, but it's a good quote. When the facts change, I change my mind. And the Fed is faced with that right now. We've got a lot of data that has already come in suggesting the economy is weak and suggesting the economy is fine. And now we have some more data coming up that are going to be really decisive for the Fed, including the June jobs report, the June CPI report, the jobs report, of course, on Friday, retail sales, and then the Fed meeting is the 27th of July. And they're going to have to sort out whether or not they need to continue being aggressive. Watch that CPI number for a clue there. And don't anticipate that the markets are going to stay where they are. They're going to move around an awful lot.
Mike, given the slew of economic data that we're going to see, it comes down to Fed speak. Who should we listen to or listen for in the coming days and weeks to get a nuance of what the Fed's thinking?
Boy, did you tee that one up, Tom. Today, we get the St. Louis boys. We get Chris Waller, the governor who came from the St. Louis Fed, and Jim Bullard, who is the president of the St. Louis Fed. They've been the ones who've been out front in noting changes in the economic, as Bullard says, regime. And they're the ones who you might want to watch for clues to where the rest of the committee may go. And of course, if anything comes out of Jay Powell, you got to pay attention to that.
Michael McKee, thanks so much. Greatly appreciate it. What he just said, John, is absolutely critical here to Bullard in the regime change. Are we at a point of a regime change?
Let's be really clear. Credit to Jim Bullard of the St. Louis Fed. I was very critical of Jim Bullard going through the pandemic, at least the very beginning of things as that started to unfold. I thought a conversation he had going into that was almost tone deaf. This time around, he has really led the way, Tom.
Yeah.
On front loading, on the problem that we had in store. He pushed to try and remove QE a little bit earlier. That didn't happen. He's a man we've still got to listen to.
And this is interesting because Heather Boucher was just with us, New School of Social Research, sort of an urban inequality analyst. He's a hard-nosed Indiana PhD, and he's much more in touch with the fabric of America than the wonkiness around the table at the Eccles Building.
Where's this music coming from? What's that?
I don't know.
If they can hear that on TV and radio.
Maybe the entourage as Anne-Marie moves to the White House.
They follow her with music.
Yeah.
They play for that.
On radio here
every
across from
morning.
Lafayette Park, the White House, and all Anne-Marie Horton making her pilgrimage over to 1600
cool.
Pennsylvania
I love that she has a band that walks with her.
She has a band that walks with her.
Pretty impressive stuff.
Should we get back on track here?
We could try. Joining us now is John Hancock's Emily Rowland, Chris Harvey of Wells Fargo. Emily, we're not going to ask you about what's happening in the UK. Don't worry, I'll start with this market. We've had 3 days of gains. We've got another morning potentially of the S&P 500 claiming. Can you help me understand whether this is a bounce that you want to get behind?
Yeah, we wouldn't overplay it, John. We're seeing a bit of a relief here on the inflation front. Clearly, oil prices coming down are a really big deal. The economic data is pretty decent here, but we've got a lot coming up. Mike McKee mentioned CPI. We've got earnings season starting next week. We think there's going to be a big challenge here to profit margins as we move through. It's going to be really challenging given higher input costs, higher interest costs, higher labor costs. So a lot of big catalysts in the market coming up over the next couple of weeks. We wouldn't get too comfortable. There's been a lot of people that seem to be kind of not paying a lot of attention to the inverted yield curve, which re-inverted over the last couple of days. We know that typically precedes a recession, so don't get too comfortable here.
Chris, what are the nuances of the last number of days up we've seen? Which sectors are leading the way? Is there a distinction you can make there?
Tom, one thing I would say over the last couple of days is the equity market is more of a growth market. And what we've seen is we've seen rates come down. And as rates come down, growth is doing better. And so that's dragging the market up. And believe it or not, this time, at least in the short term, bad news is good news. But I would echo Emily's sentiment. We can't get behind a rally just yet. You're going to have some big rallies, some face-ripping rallies. You're going to have some big sell-offs. But at the end of the day, what you need to see is you need to see the Fed toggle down from 75 to 50 to 25 before you can see a sustained rally.
Chris, have you got an idea of what brings about that change for this Fed? Is it in the data? Is it a pressure point in the market? What is it?
John, I really wish I knew. And let me explain why. I cannot handicap Powell. I have no idea why he shifted back in January 19th. I have no idea why he shifted earlier from inflation dove to inflation hawk, right? It's not based on the data that I'm seeing. The data I'm seeing is saying commodity prices are coming down, energy prices are coming down, break-evens are coming down. The consumer is reacting to price, something they did not do last year. Everything is saying inflation is abating. I just can't handicap Powell because in the past, I don't know what makes him change.
Right. Emily Rowland, if inflation is abating, what has it done to an analysis of the revenue across all the different sectors of the earnings we're going to see? Do you bring down your revenue guesstimates as you try to game out what to do in the second half?
You know, inflationary pressures are coming down, but they remain incredibly elevated. And we do think that that's going to be a challenge to profit margins, which are sitting at the highest level since the 1990s right now, 13.2% for the S&P 500. That's got to come down as we move through earnings season. But we do think that there are companies with great balance sheets, good return on equity, lots of cash on their balance sheets, which if frank, and the baby that's been sold off with the bathwater. So we're looking particularly at higher quality companies, which we do think can actually fare really well as we head through this earnings season.
Emily, can you talk to me a little bit more about earnings season? You mentioned there where you think we could have some success. I want to understand the really hard question and try and answer this for me. Have we priced the shock that is coming through the retailers yet? Because when we hear from them, the stocks gap lower, and then we hear from them again, and the stocks gap lower, and then some people tell me, well, we understand this story. We've heard it so many times. We've been talking about it forever, and yet, Emily, it doesn't look priced every time we get a little drip feed of information. Is it priced?
Yeah, I think that's fair, and it probably isn't as it relates to retail. There's a lot more pain to come to the consumer as they shift from a mindset of the things that they want versus the things that they need. And we're going to see them eschewing the things that they want. And that's clearly impacted retailers. It's also a double whammy because they're getting hit by the fact that they've built up their inventories too much and now demand is slowing. The thing to remember, though, is, and Chris made a great point about growth stocks bringing the market higher, retailers are a pretty tiny part of the S&P 500. So when we start to look at earnings season, the impact might actually be minimal. And we're more watching the tech space, the financial space, for clues about where the broad market goes from here.
Emily Rowland, Chris Harvey, to the both of you, thank you. They'll be sticking with us as we try and work out what's next for this market. Looking ahead to next week with CPI and DEG and earnings from JP Morgan and the big banks as well. Futures right now up 0.5%. Check it in on the markets for us going into the opening bell 19 minutes away. Here's Katie Lyons.
Yeah, less than 20 minutes to go, John. And we are looking potentially at a fourth day of gains because right now futures are in positive territory by about 17 points or so, up about 0.5% on S&P futures. Of course, it is recession talk, but also politics that are dominating the conversation, particularly in the UK, where Prime Minister Boris Johnson said that he is stepping down as party leader. Right now, the cable rate trading in and around 119.49, so it is a stronger pound, though, again, we're at 119, so we have to keep that context in mind. As for the bond market, you are still looking at an inverted yield curve. Right now, the 10-year Treasury yield trading around 294, but that's about 4 or 5 basis points below that of the 2-year yield, so that really reflects the recession or at least slowdown fear that is out there. And then pay attention to oil. I know, John, you were trying to get used to a 99 handle on crude. You didn't have that much time to get used to it because we're back up north of 100, 101.27 on WTI at the moment. As for some stocks moving underneath the surface, semiconductors, a big group outperforming today, thanks a lot to Samsung, posting stronger than expected revenue growth in Asia overnight. That's lending boost to the demand picture, or sentiment around the demand picture for chip stocks. NVIDIA is up, as is Applied Materials, each north of about 2 percentage points. You also had some news out of China, in particular, reports that they are looking at more stimulus. That could boost demand for some of those base metals. That's lifting the likes of Freeport-McMoRan up about 5%, and CGen moving higher on a takeover potentially from Merck, John.
Kelly Lyons, thank you. Counting you down to the opening bell, around about 18 minutes away. Coming up on this programme, we head to the United Kingdom with Prime Minister Boris Johnson announcing what many people expected him to announce. He's stepping down.
It is clearly now the will of the Parliamentary Conservative Party that there should be a new leader of that party and therefore a new Prime Minister.
We will have a new Prime Minister. What we don't know is the timetable for a leadership transition. We do know this, though. The Prime Minister will be meeting his cabinet in around about 47 minutes from now. From Washington, this is Bloomberg.
about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It is clearly now the will of the Parliamentary Conservative Party that there should be a new leader of that party and therefore a new Prime Minister. And I've agreed with Sir Graham Brady, the chairman of our backbench MPs, that the process of choosing that new leader should begin now. And the timetable will be announced next week. And I've today appointed a cabinet to serve, as I will, until a new leader is in place.
What an eventful day for the Prime Minister, Boris Johnson.
Stunning.
That from just 2 hours ago. Tom, we understand he'll meet with his cabinet in about 45 minutes. Someone joked with me almost immediately, he'll meet with who? How big is that cabinet as things stand?
Well, we don't know. And what I would say for our American audience on radio and TV, and John, brief me on this, is the speed of polling in the United Kingdom leaves America in the dust. Camilla Turner at the Telegraph, and I'm sure others are doing it right now. They're out in the last 50 minutes. I mean, they just took the podium away. Larry the Cat helped with that. 13% for Ben Wallace, who we've talked about this morning.
Sure.
Penny Mordaunt, who I think Francine knows, 12%. Mr. Sunak, 10, et cetera, et cetera. But it's the speed of this gamesmanship within the parliamentary system. Are you surprised by that?
No. We've seen this so many times.
This is the way it goes.
I mean, we're used to this now, aren't we?
Help me with this. When you leave 10 Downing Street, it's not like a big deal. It's like, you know, you pack up your bags and you go.
Well, we have a tradition that when you're done, you're done. We have that tradition. Also, the Conservative Party has a history of this. Can get pretty vicious within that party.
Okay, I'm just looking at
with the polls?
I'm done with the YouGov poll. I mean, Francine lives this. She lives it.
Francine's living it right now on Abington Green. Francine, let's talk about it. We've heard from the Prime Minister. What do we understand the timetable currently is for this leadership transition?
Well, so first of all, it's extremely unclear what the rules or what will be in place in terms of when they start voting. What we understood from that speech, and I thought it was extremely significant that he did not apologize. So there was no hint of this was my fault and it's right for me to go. He blamed his party. He said, I tried to stay on because that was the right thing to do, but my MPs will not have it. Now, in terms of timetable, it's very clear that if the party does want to get rid of Boris Johnson, who at the moment will stay as caretaker until they find a new leader, that should be before October. October, but if the party wants him earlier gone, what does that mean? And then in terms of when the voting process starts, so we know that MPs will vote 2 or 3 times. Before then, the 200,000, of course, Conservative members vote on the final 2 names. We'll know more next week about exactly the timetable and process of that, but it's not a fast thing. It certainly takes at least a couple of weeks.
Francine, wonderful coverage, as always, from you. Look out for Francine's coverage through the day on Bloomberg TV and on Bloomberg Radio. TK, that's the direction of travel for this Prime Minister. He heads towards the exit door. And then whoever comes through has got to confront the same problem the rest of Europe is confronting right now, and the United States for that matter as well. It's inflation. It's inflation, inflation.
You're trying to be serious here. Bloomberg UK now out front with an important brief, John, of where the Queen plays her constitutional role within this crisis.
The stage is yours.
To be clear,
walk us through it.
She plays no part in this process.
A ceremonial role. Can we call it that?
She'll greet Mr. Johnson at some point as he says goodbye.
Something like that, yeah.
Okay.
What's the next step after that?
The next step is you move on to something dry as dust with Chris Harvey and Emily Holland. Let's do that right now.
Did you not see this episode in The Crown? Is that how you don't know?
No, I just think it calls for another season of The Crown right now. There's no question.
Chris Harvey, Emily Rowland with us. I've promised them we won't talk about British politics. Emily, I want to talk about this though: the state of Europe. This economy, and I'm not talking about the UK, I'm talking about the Eurozone, is facing some real problems right now. We had a guest, Patrick Armstrong of Plurimi Wealth, earlier on Bloomberg Surveillance, who suggested that economy is already in recession, and that it's too early to step in, and this ECB, if it hikes, they'll get stuck at 0. What's your interpretation of what's happening there, how policymakers will respond to it, and whether you want to put a single dollar to work in that market?
Yeah, John, I thought we were going to get a chance to talk about the men's semifinal at Wimbledon tomorrow, but, we can save that for another day. Europe is in a tough spot right now. Policymakers, central bankers in Europe are going to have a really, really tough time, raising rates into an incredibly, significant slowdown in economic growth there. We are underweight European equities versus the U.S. If you want to own quality stocks, again, great balance sheets, good free cash flow, good return on equity, the U.S. is the poster child for that. When you look internationally, you're going to get a lot more cyclicality. You're going to get a lot higher beta. You're going to get a lot more economic sensitivity just investing in an index there. If you want to invest in non-U.S. equities, if you want to invest in Europe, we would take a very high quality, very, very defensive approach there today.
Well, Chris, do you have an understanding of use of cash by corporations into this earnings season? Or are we going to have to listen very carefully? We have the Dow Jones Industrial Average back above 31,000. As Emily speaks of quality, Chris Harvey, do you look at quality to deliver use of cash?
As far as use of cash, we're seeing 2 different things, Tom. There's a lot of cash on the balance sheet. We would expect at some point in time a lot more M&A to happen, right? But bid-ask spreads are pretty wide. The second thing we would expect to see is buybacks occur. But we're hearing kind of a divergent view. Some people are saying, hey, we want to save our cash because we're not sure the economic outlook. We don't want to burn through it. Others are taking this as an opportunity to buy. So overall, we're seeing some cash being put to work, but unclear how aggressive people want to be. And I think you have to get through this earnings season before people make some major decisions. I wouldn't expect a lot of M&A in the short term, but if things clear up on the geopolitical side, if rates begin to normalize, I would expect to see a lot more M&A in the back half of the year.
Emily, you get the final word. Can you explain to Tom who Rafa is? Because in the last hour, he just shrugged his shoulders at me and gave me a blank look, a blank stare, as if to suggest he had no idea who Rafa Nadal was.
Are you kidding me? He just made his 38th straight men's semifinal. That is like a heroic sports endeavor that cannot be matched by anyone else. I cannot wait to watch tomorrow. I will, of course, be watching the jobs report at the same time, but that might take priority.
Emily Rowland, Chris Harvey. 8:30 Eastern time, he's set to play Kyrgios tomorrow, Tom. At the same time, we get the payrolls report. To the both of you, thank you. If he's fit enough, apparently a bit injured yesterday, some kind of abdominal strain. playing yesterday.
It's tough, whether it's clay or grass, and the difference between clay and grass is ginormous.
As you know.
It's like huge.
He's got a massive topspin game and got to play a little flatter.
First time I ever played on grass, I remember the ball hit the grass, and John, it went for like 3. I was like, oh, that's different.
Can you explain to us the last time you played tennis?
Yes, it was a Schlesinger championship racket.
Wooden rackets?
And wooden rackets, and there was a little fuzzy ball, and if you didn't wear whites, you couldn't step on the court.
Very nice. Very traditional.
A few years ago.
Nice. Do you want to name the court?
A few years ago. Oh, we went from country club.
I'm sure you did.
Country club.
That doesn't shock me at all. Coming up, Brian Weinstein of Morgan Stanley on this fixed income market. Looking forward to that. And Brian Deese, the National Economic Council Director, a conversation you do not want to miss right here on a special extended edition of Bloomberg Surveillance Live on TV and radio, right here from Washington, D.C.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Live Live from the nation's capital this morning. Good morning to you all from Washington, D.C. Looking at Wall Street now ahead of the market open with futures positive 0.5% on the S&P 500. On the NASDAQ 100, up 1/3%. That is your opening bow with equities just a little firmer. A euro with a 101 handle. Get used to that, apparently.
In the Dow up 200 points.
That is the first time that's ever happened in this hour on Bloomberg TV. I'm sure it's happened many times on Bloomberg Radio.
A number that America can understand, folks. The Dow Jones Industrial Average beneath the 36,000 level.
You're going to keep winding me up for the next 30 minutes. Let's talk about this bond market. 293. 293, Tom, on a US 10-year, and a bit of curve inversion out there too.
Very seriously, for global Wall Street, what we've seen here in the last 24 hours is further inversion, and I really want to emphasize to the pros, each basis point below flat zero parity really matters.
If I knew you'd be quoting that Dow, I would not have agreed to this, Tom. I would not have agreed to it. I imagine you're going to get about 20 more Dow quotes before this is finished.
Can you get Anaconda Copper up there, please?
Okay, let's get to Katie Lies for more. Hey, Katie.
Hey, John. Well, we are actually seeing oil rebounding as well. $102 a barrel is where we trade on WTI, so no surprise. It is the energy sector that is outperforming at the open, and that's reflected in some of the individual movers like ExxonMobil, which is up more than 3% early in the trade here. You also have some of the more industrial metal-tied stocks moving higher as there's stimulus talk out of China. That's lifting the likes of Alcoa up about 7%. And then for some of those more idiosyncratic stories, Bed Bath & Beyond is one outsized mover higher this morning. It's interim CEO, other directors are buying up the stock after a 70% decline so far this year. That stock is up about 4%. And finally, GameStop. You know it, John and Tom. I know it. A stock split doesn't do anything for the fundamentals of a company, but yet the news of a 4-for-1 stock split coming from GameStop, the idea that maybe that makes it easier for retail traders to buy this stock, is lifting shares this morning up to the tune of nearly 7%, John.
Katie Lies, thank you.
Are they still memes? Are they still meme stocks?
Katie, thank you very much. I think people refer to them as meme stocks.
They're still meme stocks.
Sure.
Okay.
This is making it sound like we're really on top of this. You do realize that.
I know. On radio and television, what is so important here is to be fair and sometimes balanced. And we do this with John Farrell. I was so rude on July 4th. Thank you for the huge response from the United Kingdom. We did note that the colonies won the war back a few years ago, 1787. But to be fair, we also need to note on this wonderful visit to the Hay Adams and the history that we see behind us, that on August 24th, 1814, the British torched the White House. I just want you to be careful. They torched the White House.
Okay, let me share this with you. In my education, I don't know if it's true of British schools still, we weren't really taught about any of this.
I know.
At all. They didn't really tell us any of that stuff. So when it came to Independence Day and the celebration you have, we have no problem with it whatsoever. I'm very happy to wish my American friends a long weekend and a happy 4th. Well, why would you think that we would be offended by something that happened that long ago?
Because we believe in the Founding Fathers. Seriously, it's a huge part of our judicial debate right now. But we have an authenticity on Bloomberg surveillance because we know our history, both British and American.
And this is an authentic, original program, that's for sure. Let me share this with you. I just had a sneak peek of CPI next week. Headline in the survey. Early days, hardly any estimates in, but on the headline number, do you want to know what that number is right now?
Double digit.
In our survey, 8.8%.
Wow.
Just another tick higher. Now, Wall Street, we know, will be trading off the month-on-month core figures. We get all of that. But that headline number, Tom, we're looking for an 8.8%. As things stand, and that can change as we build out the survey a bit more.
Folks, we're data dependent. That's what it comes down to.
Very much so for this Fed too. In Sun Valley, let's get over to Ed Ludlow for a little bit more. Ed, we're told the main event isn't today. It's not even tomorrow. It's over the weekend. Tee things up for us.
Yeah, so sources telling me that Elon Musk will arrive probably today, Thursday, and he's going to speak on Saturday, give a presentation of some kind. We don't know the content, but that's the slot that's normally reserved for one Warren Buffett. Warren Buffett always speaks on the final day of Allen & Co.'s conference here in Sun Valley. Interesting, you're talking about inflation. Inflation's really top of mind here, but so is the spending power of the global consumer. And I was watching Samsung overnight, right? 21% jump in quarterly sales for the June quarter. They are the bellwether of consumer spending because of electronics. And that better than expected sales helped by the Korean won. You see the NASDAQ 100 up higher, chip stocks driving that during Thursday morning session. Everyone's paying attention to stuff like that here, John. They're looking at their industries. These are TMT executives. They want to look at signs in the semiconductor industry where we've gone from a deficit of available chips to a glut, and things are looking more positive in the moment.
Ed, what does the famed Ludlow humility meter say in Sun Valley? If we've had the challenges of Netflix, the challenges of Amazon really, really struggling and moving cardboard boxes, what's the humility level you're acclaimed to measure?
Everyone is high-fiving, Tom. They're out on their mountain bikes. What I'm told by return attendees of the Allen & Co conference is this is like it was pre-pandemic. They're paying attention to the short-term volatility in public markets, but they're positive. You know, David Zaslav, Warner Discovery CEO, is kind of king of the hill because his company went through a successful merger. He's optimistic about how they're faring, even with a sort of cost-cut reduction program going on in the background. And then the titans of last year, you'll remember, Tom, you and I spoke last year, and you reminded the audience of what a fantastic skier I am with the mountains behind me. But Reed Hastings, Ted Sandros at Netflix, they were the kings of the hill last year, and they're having a much lower profile visit this year. But all the same things are happening, the same meetings in the corridors, the same talk of the global economy, but with optimism.
There we go, Ed Ludlow. That must be the one place on the planet, where they're running around high-fiving each other.
Could you see me and you going to Sun Valley?
No.
First of all, we'd have to wear ties.
I thought they wear those vests.
Well, I'm not going to wear some stupid Patagonia vest. You know, I look like a beach whale. But the bottom line is, John, the bottom line is Ed absolutely nailed how they are so removed from reality.
Andrew expect me to speak after picturing you in a Patagonia vest like a beach whale.
How many people, seriously, folks, Zaslav at Discoveries, there's some amazing challenges there.
Sure.
Warner Discovery merging and all that. They're going through serious cost cutting, and they're out there wanting beach.
Can you go to our next guest?
Okay, well, I'll go to Brian Weinstein right now, who's going, do I have to talk about Sun Valley? No, hopefully I don't.
No, please don't.
Brian, good morning to you, and thank you for joining us. We're a little punchy here. It's been a hugely political day for us. When we look at the markets right now, they're going to come off a jobs report. It is a jobs report. It's not historic, but it has a certain weight to it. How do you trade off this jobs report? How do you reallocate off this jobs report?
You know, I think the market is still coming to terms with the Fed and the slowdown, and you know, the idea that we're just going to easily hike and then ease. The bond market has a lot of adjusting to do. So I think this report will give us a slight window into what's coming, but it's not going to settle anything. I think the markets are going to be just as unsettled after the number tomorrow as they are today.
Just reading another downgrade, Tom, from the S&P. John Stolfus of Oppenheimer. Did you see that one coming? I think many of us were waiting for it. 4,800 is his new price target. The previous read from him, the previous target, 5,330. Of course, as we know, we had Jonathan Gold of Credit Suisse come down from 4,900 to 43. So still pretty bullish, John Stolfus, looking for 4,800 year end. Brian, I've been catching up with people in the bond market. And as you know, one of the questions we've been asking is whether we've seen the high in the 10-year yet for this year. Now, I think a lot of people in this equity market would take comfort from that. If you think we have, do you think we have?
I'm not sure we have. I think we may have come close. I think we have to revisit it. I think we got that nice bounce off of that 350-ish level, and stocks felt better about, again, the ease that's coming. I read the Fed minutes yesterday and look at the data, and I don't think it's going to be that easy. I think inflation is not going to slow down as quickly as they wanted to. Growth is certainly slowing, but I don't think it's a disaster. So technical recession maybe, but is the Fed going to stop? No, and I'm not sure we've seen the highs yet.
Brian, there's a partition seriously at Sun Valley between companies minting money down the income statement and a lot of others, maybe with some good revenue pop, but that's about it. In the recovery out 1 year, 2 years, when Mike Wilson tells us that it's finally stocks up, will there be a partition between free cash flow and those that don't have it?
I think so. I mean, the way we look at it in the bond market's a little bit different, but certainly I think that the idea that we're going to get free money again, the idea that you can buy any bond and it's not going to default, I think that's going away.
Yeah.
Which is why I think you're seeing junk bonds struggle, which is why you're seeing loans struggle a bit. There's great value out there, but there's also great danger, right? So the idea that you can just buy any bond and that you're going to be okay, to answer your question directly, I think cash flow is going to matter, and it matter a lot.
Well, I wanted to bring this up, Brian, because it's so important to the bond market. Is the surprise going to be the issuance of more debt by the haves, by the companies with huge free cash flow?
I think they'll continue to issue. I'm not sure it'll be a big surprise. I think people are going to be surprised at how much the curve inverts, and that means that's okay. I mean, it's not great, as you say. It means recession, but as far as being an issuer, you can issue out the yield curve, right? These are still historically low rates. Companies are still growing faster than the rate they're going to issue at. So I expect that we'll continue to see issuance out the yield curve from those companies for sure.
Brian, if you don't think we've seen the highs on 10-year Treasury yields, do you think we've seen the wides on credit spreads?
No, I don't think we've seen the wides on credit spreads. Again, in a default-adjusted environment, at 4% high yield, a couple of months ago, and everybody wanted it, people were expecting a 1% default rate, and yields in places were negative. With yields positive and yields positive across the globe, and default rates going up, I think you're going to see wider spreads still. So I don't think we're done yet. And again, with the Fed hiking rates more and the uncertainty out there, I think we've seen probably the worst of it, but I expect spreads to keep leaking wider.
Brian Weinstein at Morgan Stanley. Wow, those two takes from Brian Weinstein just there. Tom, if you're an equity bull, can you take any comfort from one, Brian Weinstein saying, I don't think we've seen the highs on 10-year Treasury yields, and two, essentially off the back of that, suggesting he doesn't think we've seen the wides on credit spreads either. If you're long equities and that call materializes, we got a problem, haven't we?
I must say we need to see the credit spreads level or come in, I should say, if we really want to get more of a bullish tone. We're not there yet. The last couple of weeks have been really ugly.
It's been tough, Tom.
We're weak at this without Abramowitz here, but
We'll be better with Lisa next week when she comes back. But on the credit front, as you know, and we talked about it with Lisa last week, we've taken out levels that we took out back in 2018 that forced this Federal Reserve to rethink its tightening. This time around, because of the inflation backdrop, that so-called Fed put is in a different place. Some people might say it's retired, and it will take a lot for this Fed put to come out of retirement.
I believe in the power of the institution. I would suggest the put can still be there. I talked to Lisa last night, John, about CDS and CREET, and she said there's enough momentum there. There's enough dynamics, if you will, there right now that off the jobs report and on a bullish recovery framework, you need to have her world improve.
You brought up CDS and CREET, and I know you're joking, but thinking of Greece and perhaps going across to Italy and over to Switzerland too, have you seen the CDS on some single names, on some European bank names?
The bank names are frightening.
Tom, we got a problem in that economy.
Yeah, this is frightening, and we like to be polite here, and when we speak to people from continental Europe, maybe we don't mention individual banks. It's maybe a bit rude. But for global Wall Street, the CDS value on the Bloomberg terminal right now is front and center. Absolutely.
Without a doubt. Without a doubt. Front and center for us is the White House. And coming up, the Biden administration facing surging prices and a slowing economy.
The president is not shockingly naive. And we are in this moment of global crisis in terms of energy, and he is using the tools at his disposal to make sure that the prices that people pay at the pump are fair.
We'll get the view from the White House with the National Economic Director, Brian Deese. That conversation is coming up next from Washington, D.C. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible, to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Live from the nation's capital this morning, a good morning. Together with Tom Keene, I'm Jonathan Ferro. With equities up, let's call it 39 points, up 1 full percentage point, TK. I make that day four. Day four of grinding out some gains, TK.
I think it's about
going into a big print tomorrow morning.
Tea leaves, inflation rolling over a little bit, certain indicators of things are better. It's 1600 Pennsylvania Avenue. I believe a gallon of gas is not as painful as it was 10 days ago.
We're moving things gradually in the right direction.
Gradually.
I don't think anyone in that building behind us wants to declare victory just yet, that's for sure.
Well, there we are, and of course on a trip to Washington and with the drama that we've seen in the United Kingdom today, we need to drive forward the conversation on the nation. We do so with Brian Deese. He's National Economic Council Director, of course working for years with Gene Sperling. And what is most important here, and part of the act of Bloomberg surveillance and what we did with Bloomberg on the economy, is microeconomics matters. There's too many people out there blathering the big picture without the foundations under it. Mr. Deese knows from Middlebury 155 in economics, microeconomics matters. I would suggest the price theory is going in your direction. There's little indications that maybe the pain is over. Not all clear, but can you say there's some constructive elements out there that you see?
Well, look, to start out, prices are unacceptably high. We are also seeing some moderation, and that moderation is important. You've seen it in core PCE, the metric that the Fed traditionally relies on, moderation over the last 3 months, particularly compared to the prior. And as you mentioned, we're seeing for the typical American consumer, a little bit of relief at the gas pump. Prices down to about $4.75, down from, down more than 25 cents. But let's be clear, they're still unacceptably high. We've got a long way to go. And so we got to keep our head down and keep a focus on bringing prices down while not giving up all the economic gains that we've made.
One of our wonderful guests, Jim Bianco of Chicago, wore a whip inflation now button on the show the other day. You people have avoided the idiocy of the early 1970s. But with that, the president has to provide a morale boost to people hammered by inflation. How do you do that?
It's not just a morale boost. We have to act, and we have to show action on behalf of the American people, and that's exactly what the president is doing. He's saying bringing prices down is his top priority, and every day he's focused on practical things that he can do. So the release of oil from the Strategic Petroleum Reserve sounds esoteric to people, but oil market analysts you've had on this show will say it was single-handedly responsible for keeping oil prices going higher. Moving to work with the refineries to try to keep refinery capacity online, that is important and makes a difference. And as we're seeing, we're starting to see a little bit of that moderation at the pump. The president is saying, let's do more. Let's do everything we possibly can. He called for a temporary holiday for the gas tax. That's not going to solve every issue. That would make a little bit of difference as well. So you need a president who's going to keep at it and who's going to communicate clear to the American people that we are making progress, that we have made enormous economic progress, but that he's not satisfied and we're going to stay at it.
You're not satisfied either, but you've talked about a higher goal. You've talked about defending the world liberal order and that we had to stand firm. What did you mean by that?
Well, let's be very clear. That's a concept that Republicans and Democrats have embraced for years, and it's about democracy. It's about the democracy and the democratic tradition that grew out of World War II and that has served our national security interests and economic interests well. And standing up for democracy is something that this president feels strongly about. And so we are going to fight to bring prices down. We're going to fight to get increased oil supply on the market. But what we're not going to do is to suggest that the only way to do that is to actually step away from the Ukrainian people, to step away from fighting for democracy and everything that believes.
If standing up for democracy is truly paramount, and you've quite clearly just suggested it is, why is this administration considering removing tariffs on the Chinese Communist Party, which is anything but a democracy, and is also a government that you've accused of genocide? Why is that a consideration? And how does that reconcile with this view that this is about standing up for democracy?
Our economic policy should be about promoting economic security for American workers, American businesses, American families. And so we have to look at everything through that lens. In the prior administration, they took an approach to escalating trade tensions and a trade war with China that ultimately didn't serve that purpose, didn't help our farmers and our ranchers, didn't help many sectors of the economy. So President Biden came into office committed to the proposition that we need to get tough on China. There are places where we need to be tougher and clearer about their non-market practices, about their human rights abuses. But we also need to be smarter about how to do this as well.
Why is that smarter? And let's go back to the question again and lay things out clearly. You've accused the Chinese Communist Party of genocide. You're saying that what is paramount here is defending democracy, and that defending the liberal world order is more important than the pain that people feel at the pump. And ultimately, this administration is considering removing tariffs. I wasn't convinced by the last answer. I don't think many others will either. This is an awkward moment, I know, but I really need to understand from you why it makes sense for this administration to consider removing tariffs on a country that you're accusing of genocide.
First of all, I want to be you mischaracterized my position, so I want to clarify.
Please do.
Bringing prices down for the American people is the president's top priority. He's focused on it every day, and it's because he understands the pain that people are feeling at the gas pump and around the kitchen table. At the same time, he does not believe that the way to do that would be to step back from our democratic values or to step back from protecting the Ukrainians against the invasion from Vladimir Putin. He does not believe that that is an acceptable or an appropriate choice. So, given that, our focus is on how can we actually advance the ball. And you're seeing the president in action right now doing that. The actions that he's taken around oil supply, the actions that he has taken around refineries, the actions that he is calling for around tax reductions, they all would make a difference, and they make a difference for American families.
Let's sit on China just for one final question and try and focus on policy, and I appreciate your follow-up answer. Let's talk about what you can do, because what we understand is that you're looking to remove some tariffs on certain goods, but perhaps double down the effort elsewhere. Can you give me a deeper understanding of where the current thinking of this White House is and the direction of travel for policy?
Well, there's no question that if you look at what the Chinese economy and the non-market practices that the Chinese leadership are undertaking, that there are sectors of the economy where they are engaged in unacceptable activities and that those present a strategic risk to our economy and our national security. And so those are the places where we need to focus on using all of the tools at our disposal. Tariffs are one tool, but we have other tools as well to make sure that we are protecting key sectors of the American economy and that we are holding to account for those. You look at something like semiconductors, which we've talked about before, and which is incredibly salient. We, of course, need to act here in the United States to invest in building our own domestic resilience, but we also have to take seriously that some of the actions that China are taking expose us more deeply, and we need to counter those.
Brian Deese, wonderful to catch up, the Director of the National Economic Council. Tom, these are really, really complex issues that we have to work through right now.
They are a new regime. That's all there is to it. And just to look at the Philippine election and how we project to the Pacific is part of that Chinese calculus.
Looking ahead to payrolls Friday, and perhaps another big CPI print.
Are we back in New York or are we here?
I understand we head to the airport straight after this and we fly to New York.
Okay. Oh, Teterboro, I think I can get into Teterboro.
You flying private?
Yeah.
I'm not. That tells you something about the difference between the two of us. Tom Keene, Jonathan Ferro, live from Washington, D.C. Thank you to all of you on TV and radio. This is Bloomberg Surveillance.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live in the world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the street, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. hundreds of people started arriving at their bottling plants with their lucky bottle caps, they realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees. But for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired 2 consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard In America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. and it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be a ploy by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker, but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Wiener Gold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Wiener Gold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it and I just watch it until it stops going up and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I'm interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers. One of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities and the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people want to unpack that. And so my audience is a lot of them are younger investors who are looking to hone their skills.
Tech in right up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just attacked that video and were like, you explain things so much better than my boyfriend or my professor, or I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly, this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwits, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, The hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price, before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350. Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign the ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally miles, a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, and marching trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The U.S. connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. While that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African-American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud, or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted, and that are just going to be a much bigger challenge for small business owners in rural areas.
Historically, the marginalized people, you call them as untouchables or Dalits, they have been kept away from the center of the knowledge. Once you are born into a caste, it is very difficult for you to grow beyond that. You are stuck in that identity. I think education is the best way of liberating them. So that's how I chose to work in education sector. The kind of education that we are giving to the marginalized people is going to change not just the fate of these communities in Telangana, but it is going to be the source of inspiration, source of hope for all the marginalized in this country.
Greatest flight in India is the system of caste.
For generations of Indians, the social code known as the caste system has defined how people earn a living and whom they marry. Although outlawed 7 decades ago, castes remain a significant factor in deciding everything, from family ties and cultural traditions to educational and economic opportunities. Dalits, people who are on the lowest rung of the caste system, constitute almost 1/5 of India's population of 1.3 billion. Not able to afford the high tuition of private schools, many are forced to attend government-funded institutions, which in the past have suffered from poor infrastructure, lower education standards, and high student-to-teacher ratios. But Dr. Praveen Kumar is trying to change that.
I am currently working as head of Telangana Social Welfare Residential Schools. So totally above 400 schools I manage. These are all residential schools for the students who are historically marginalized but talented and then poor. Of them, 60% are girls and then 40% are boys, because girls are more marginalized among the marginalized. Their voices are always suppressed. My approach to improve the conditions in the schools has been put your eyes and ears on the ground always. Talk to the parents, talk to the teachers, talk to the students, stay in the schools and then understand their problems, their challenges, both in classrooms and then the corridors and the dorms. Then go to the dining halls and see what kind of food they are eating, and then go to their homes and then what kind of food they are getting and what kind of challenges the parents have. One of the important changes that I brought in after I took over was to complete the transformation of mother tongue to English medium, because English medium, as I said, English is the language of emancipation, and language that connects you to the whole body of knowledge in the world. So we had to train a lot of teachers.
Refer to the dictionary also, okay, and find out the new meanings. As well as you're going to describe about. Hey, Richita, how are you? Hi, Sindhu. Fine, thank you. And how about you? I'm fine too. It's been a long time.
Identity is extremely important. There is a scientific evidence to prove that your sense of identity is extremely crucial to your growth as a successful human being in your life. If you accept an identity which is very humiliating, which reminds you of very painful past, I think that identity will not help you to grow. I'm not saying that you should forget your past. I'm not saying that, but that should not be the bubble in which you must live always. Sweros is an alternative identity. S stands for state, W stands for welfare, Aero, SW and then Aero is Swero. So the idea is your dreams have to be skybound. So that is what we are trying to achieve by changing the identities. Like, you say, I'm a Swero and I aim to be a doctor. I am a Swero, I aim to be a top-notch engineer. I am a Swero, I aim to be a top bureaucrat of this country. I'm a Swero, I want to be a very good actor or, a musician in this world. So these are the positive images that are associated with the identity. Just to give an example to you, in 2012, in our institution, we used to produce about 6 doctors per year. But because of our, this self-liberating ideology of Sveroism, we have, this year, we have produced about 189 doctors. This is phenomenal for any poorest of the poor people. You know how difficult it is to get into medical colleges in this country. So, but today, because of this ideology, the students have been able to achieve this, feat. Pujita has been a farm laborer, and her parents themselves are agricultural laborers. And then this girl used to sell vegetables, but thanks to the residential education institutions, she came to the Gaulidoddi campus, and then she toiled very hard for 1 year, despite many problems. And today, I'm so happy to share with you that she has joined one of the prestigious medical colleges in the state of Telangana, Usmania Medical College, and then in future, she hopes to be a gynecologist. So this is the journey our children are hoping for. Similarly, the Mount Everest expedition. Mount Everest expedition, we are very fortunate enough to place the youngest ever female in the history of this world on the peak of Mount Everest. How did this happen? It's all because of an ideology that helps you to liberate yourself. We brought a lot of extracurricular activities and most of them got institutionalized now. So for example, music. Similarly, the games. We have so many coaching academy. We have boxing academy, we have wrestling academy, we have handball academy. So we have, kabaddi, the traditional Indian sport. We have golf. We have introduced golf also. Like golf is generally played by so-called rich people, but today even poorest of the poor people also are being trained in golf in our schools. Wow. So our intention has been to give all 360 degrees, type of opportunities to the students so that, whoever is interested in whatever activity, they can go and then do it. Break the barriers, break the fence, at least mentally, because poor people have been programmed to be victims, programmed to be subjugated, programmed to be on the margins, always, programmed to feel inferior. We wanted to change all that. There are certain games which are exclusive to rich people. There are certain languages which are exclusive to middle class and upper middle class in this country. To put it in one word, the sole aim of introducing all these co-curricular activities is to break the stereotypes which are recklessly imposed on these people.
They're stereotypes Dr. Kumar knows all too well. Born a Dalit, his grandparents were labourers and access to the village well was restricted. Dr. Kumar credits his parents' belief in the power of education with helping him realise his aspirations. He went on to join the Indian Police Service, attended Harvard University, and then began pursuing educational reforms back home.
I attribute whatever I am today, it's to my mother primarily. They educated me in the village, although there were no good schools. So then I stayed in social welfare hostels, the hostels which are managed by government for the poorest of the poor kids. I passed with reasonably good grades. Then I went to university and then I faced worst form of discrimination in the universities. Like there were, in those days I'm talking about, so the bathrooms and the toilets were exclusively meant for scheduled castes and scheduled tribes. We used to fight discrimination on one hand and then again, try to excel in academics, day in and day out. So that's how I came to education, because I deeply believe that education is the only important weapon that can really, place the poorest of the poor people from a very victimhood orbit to a prosperous orbit. I think in future, this is going to be a game changer for the marginalized in this country.
If you look at a thermal image of a city and then compare that to a map of vegetation, you'll find that where there's greenery, the temperature is lower. That's because things like asphalt, concrete, and shingled roofs absorb more heat from the sun than trees. This is the urban heat island effect, and it accounts for higher temperatures in cities, often by several degrees compared with their surroundings. It's becoming a huge risk to human health as growing urban populations exacerbate the heating effects of climate change. Heat waves kill more people than any other extreme weather event, more than tornadoes, hurricanes, and even floods. That's why urban heat island mitigation strategies are being studied in Singapore by a group of researchers. The government-backed project called Cooling Singapore is now in the process of combining everything they've learned to create a digital tool that can help cities all over the world, starting with Singapore. In Singapore, close to the equator, temperatures regularly rise above 32 degrees Celsius.